Very good morning to you all. Oh, it's nice to be back. Tom Roberts, good to have you back as well.
Good morning, Rich. How are you?
Yeah, doing good. Doing good. 23rd of April. Where's that gone?
Flown by. Flown by.
Serious?
Trump has helped us that things have been busy, therefore it has flown by.
Yeah.
April's been a busy old month.
Good stuff. Yeah, that's right. All you guys on the chat seeing my tan, isn't it? Look at that. Carl Anderson, don't start the day like that. Vodafone cut to underweight at JP Morgan, 62 pence. What kind of welcome back is that?
That's not very nice.
5 days.
Not a very nice Wednesday morning.
Carl's decided, right, where can I hit him most, where it hurts? And look, he's waited until 10 seconds after we've come on air. Carl, out, gone. Right, good morning to you all. How are you doing? Julian, good morning. Parky, good morning. Waka Waka. Jesse 14 in. Frosty, great opportunity to short the market, he's saying. I don't disagree, actually. I think we've had a lot of froth over the past 24 hours, which we'll take a look at. And, you know, not much actual action.
No, and
that's the theme of the morning, I think.
A lot of, just read across from America. I was looking at the FTSE yesterday, up a good 100 points. This morning we're at 7:30, Rich. FTSE's been called up another 103 points. We're at 84.30. I was just talking to Pete Ward on the desk and various others.
Oh, he's in, is he? Good.
He is.
Good. He's taking me to lunch.
You know, 84.30.
Yeah, let's have a
really
quick look
big
at those
comeback on that.
futures.
If you look at the FTSE chart, it's 2 days straight line on, I'd say, the back of, you know, obviously what the US has been saying, but going back to your comment about froth, not a huge amount of substance to what reality is at the moment.
I guess, you know, look, well, let's take a look at what's coming up on today's show first. And then we can get into the meat of what on earth is going on. So myself and Mr. Roberts here through with you till 8:30. Then Angeline is with Isar. Ange and I are looking at the all sessions, which will be interesting with the S&P now up 1.7%. We're going to take a look back at the bonds interview with Reza, and then Ange has Assam back for IG experiences at 9:45. So yeah, let's go straight into overnight action, because there's a lot to talk about, and as I say, working out what's real and what's not. There's also a bit of fake news out there. So let's go into overnight action and go through it all. Right, so we've got Besant, who has decided to drop market-moving information in a closed-door JP Morgan investor meeting. You can't do that.
Correct.
A closed-door meeting with no press in it. And thankfully, Bloomberg had a source inside that managed to get his comment out. But do you put much credence behind this comment? I think it's been misquoted a little bit.
I think, yeah, I mean, the rally was fueled by what he said about the indicated the China tariff standoff. But
what did he actually say? That's the thing. Because
he said it's unsustainable, didn't he? Was the quote.
He says it's unsustainable. That is true.
And that Trump basically is softening his rhetoric on China. So what they're going to be saying, how they're going to be doing it, it will soften overall, and that's what fueled the rally. But
he also said that they're not talking at this moment. So he said that it's only escalated until now. The next step will most likely be de-escalation.
Well, he said, in quotes, will not be anywhere near the levels of tariffs where they're indicated at the moment, 145% or whatever it is.
Shit, Sherlock, right?
Yeah.
Otherwise, the world comes to an end. So it's like, you know, saying that the tariffs aren't going to be 145. Now Trump did back that up later on and said that they won't be sustained at these levels, but they won't be zero. So,
but coming back to your point about he's done this in a closed environment, this is from a government that 2 weeks ago, Trump was tweeting going, everything's going to be okay, DJT. I mean, it's slight madness of either they're on the inside or everybody else is on the outside. It's sort of one or the other. No one's together on
Could be
what they're
forgiven
saying.
to think they might have got long on Monday night.
Who knows? Who knows? I can't comment on that speculation.
I'm sure it's not true, but suddenly, either that or the markets rule Trump. The markets absolutely dictate what comes out of his mouth, because we saw the worries about Powell.
Yep.
Next thing he says, I'm not going to fire Powell. I never even considered it.
It's a good point on the markets comment, Rich, because there was a graph going around yesterday that Trump's second term in power now is the worst performance in market history for the last 15 presidents.
Yeah, well,
so they had a graph of all different presidents and what the market had done, and Trump's was averaging down like 16%. Chris Beecham brought up the chart, which I'm sure our viewers will be able to see at some point over the next few days. But he's obviously listening to the markets, and to your point, are the markets then controlling him, saying, you need to soften your rhetoric, you need to come out with some positive statements, etc.
Which is quite a celebration for us all, actually. The fact that markets can dictate his stupidness and his ridiculous, that, you know, to call Powell stupid and to direct him to cut rates. No, the Fed is independent, and the markets are saying it's independent. You are not having any sway on this.
But does it come down to the dollar? He is persuaded, he is influenced by the US dollar. His businesses, his family. He is a money man, and you know he wants good times for all, basically.
Yeah, but he doesn't want the dollar weaker.
No, as in he's controlled personally by a sense of money and by that market's going well.
The dollar,
and that he wants the dollar to do, do what he wants to do. I do think a lot of it is a vanity project for him.
Yeah.
Obviously, got to be careful what I say, but I think it's all.
I'm not sure you do anymore. Freedom of speech and all that.
I mean, he said he has no intention of firing Fed Chairman Powell.
Yeah.
That was a big statement. That's because that was a lot of speculation, and he has come out and stated in black and white,
yeah,
I've got no intention to do it.
What I do like is that he takes away the Black Swan event. He takes away the absolute worst case scenario every time.
Yeah.
Right? China is going to de-escalate. We stop the tariffs on the rest of the world, take that back to 10%. I'm not going to fire Powell. So all the real tail risk on this market has been taken out every time the market's pushed back against him. So for that reason, then you're pretty confident you stay above 5,000. So selling puts there seems like, because every time we get anywhere close, boom, the positive comments come out. So maybe there is a Trump put.
Maybe. I mean, as you said this morning, everything's very positive on the back of, some statements last night. Some of the corporate results weren't good last night, so
yeah, we'll get onto that in a second. One story that seems to be fake news. Just be careful. There is a social media report that Reuters said that President Trump and Xi will meet in early May. Now, I cannot find that anywhere on Reuters, and it looks like people are taking it as a Reuters headline, but somebody on social media has actually spread that fake news. So there's no meeting as of yet for Trump and Xi to. So
there hasn't been a formal statement saying they're going to meet?
No, absolutely not.
So someone just made it up, basically?
Somebody's made that one up. What there is are China and America are both going to be at the IMF meeting, and China's sending quite a senior delegation. So there's an opportunity for, back channel talks to happen there at a little meeting off the side of the IMF.
I know this is slightly a side point, but I wonder if China is being represented this weekend at the Pope's funeral, because Trump will be there. Now, it may be a senior person within the Chinese government who's gone to represent, and then obviously they may have, an informal meeting there.
Come on, let's give respect for the big man.
It's weddings and funerals is where things happen.
Talking about funerals, Tesla.
Yes.
I mean, that was a shocking set of numbers, but it doesn't matter because Elon's promised something. Not like Elon to promise something in the future to dark the
Yeah.
put the silver lining around a very dark cloud.
I mean, just looking at the numbers for the viewers who may or may not have seen it out there, revenue was down, year-on-year revenue change was down, EPS was down, vehicles delivered, which is an important one, 336,000 plays 366,000, so that's about an 8% miss on that, on the actual physical delivery.
30,000 vehicles short.
Vehicles delivered in Q1, that is a big miss, just for people to look at that sort of number. Operating margin down, gross margin down, and free cash flow margin was up, but they had a quite a big negative, 12% negative last quarter, so it's just a movement from that.
And you're probably, because you know that your sales are dropping, you're probably not building as many new cars, therefore your metrics do look better in that instance.
Correct. And remember, this is a low margin business, so they really have to look at the bottom line here and see where they're going to get their money from. I did read an article by Sean Merrison yesterday that Tesla will be looking also at their energy side of their business, which produces 10% of their gross revenue.
Right.
I haven't delved deep enough into the numbers, but they did say that there's going to be further tariffs that may affect that energy business. So that's also put Musk probably on the back foot a little bit. But share price did very well.
Yeah.
Post-market,
so
very well.
Currently looking up 10% at, or is that, maybe that was including yesterday's move?
So it was something like a 4.8 pre, and then a 5.2, 5.3 post.
Okay.
So you've got 10% there, sorry, 5.39% post it was, but it traded above 250.
Yeah, right. Let's see. Well, I would imagine it will open there because we got the futures up so strong. Let's take a look at some of those other moves yesterday, actually, because there really are some big moves, and of course the all sessions took in the comments from Trump after hours as well. So these are some of moves that you'll see included this morning. GE up 8%.
Yeah.
Palantir up 7, Meta up 7, Amazon, Netflix. Netflix, great numbers on Thursday night as well since I've last seen you. So strong from them. Apple up 6%, Nvidia up 6, Intel up 5.5. Yeah, really strong day.
Did you see the Intel news?
No.
So they announced last night after hours, they're set to announce over 20% of staff will be made redundant this week.
Right. Okay. So the reorg really taking effect there.
So staff reduction plans this week have been announced. Looks like a 20% cut, which, you know, in any business is huge, but in Intel, that's you know, really is huge numbers for people out there.
Yeah.
But yeah, there's a few stories going around, but the positivity, I like what the viewer said this morning, you know, maybe there is a lot of froth out there. Is it time to have a look on the short side of these general macro markets? I mean,
so I'm not outright shorting, but I am short a lot of calls.
Okay.
Because I think very much I put a video out on Monday. Yes, I was recording videos even over in Valencia, Maturin. What an area you have there! Absolutely wonderful. Valencia is just stunning place.
Never been, would like to go. Heard a lot about it. Heard the food's good. The weather is clearly good. You're looking great. Weather's always rich.
Thank you very much.
But you've been there before, you were saying.
That's right. Yeah. So I lived there. Well, I lived there for a month in 2017, and so know my way around the old town really well.
Yep.
Know my favourite restaurants, but was there to play paddle. So I would consider myself probably the best in Scotland at paddle.
The only person in Scotland.
I'm not sure if it's made it up there, but me and Andy Murray will be, doing doubles at the next Olympics.
Were you Were you over for a tournament or what was it?
No, it was just
bit of fun.
literally.
Fun.
I've played like 4 times before, and it just seems so much fun. But I was crap, so I had to get. And there's so much technique to it as well.
Yeah.
Like really getting down, getting your knees bent, getting under the ball, and you sort of push it rather than hitting it and turning the wrist like in tennis. You more push the ball.
I used to play a bit of tennis and thought I was okay. I've played one game of paddle against my boys who are 12 and 14.
Right.
And I was awful. Literally awful. I was buying the drinks for about a week afterwards. But it's quite difficult paddle. It's quite hard off the back of the walls, and it's like squash basically in a lot of ways.
But I mean, this guy, my teacher, or what do you call it, paddle coach, was called Mark. He was brilliant. He's been playing for like 15 years and shown all the different techniques and the angles. Because of course, because it can bounce off the back wall, there's so much more like squash, a bit more like squash. So yeah, Monkey Man, what is going on this morning? Not one single person. Good to have you back. Oh, actually, there was. Sorry, there was one person. Can someone give Rich a hairbrush? I saw him when I was away as well. I saw him say about Nicola. Oh, looks like Rich has had a shave for once. That did make me laugh. Good morning, away from the numbers, Neil. Good to have you in. So, yeah, we're watching now. Gold is not glittering this morning. It's down 2% at this moment in time, which of course makes perfect sense. It had that runaway move on the back of the risk that Powell, it was going to be the end of the world with Powell getting sacked. So that should be it, shouldn't it? 3,500 is the top.
34.80 I saw yesterday. To be fair, I saw a few clients as it started to come off go short 34.50, 34.30.
Me included.
Where are we now? 33.16. So 100-point move from yesterday afternoon.
I actually bought Bitcoin. So I thought, right, Bitcoin hasn't really moved from 87,000. Gold's at 3,500. There's a pair there.
Yep.
And definitely been helped by a risk-on sentiment. But it just makes sense, doesn't it? It's.
Did you trade it as a pair? Did you sell gold and buy Bitcoin?
Yeah.
Okay.
Yeah, and a little bit of Ethereum as well. Just because it has.
The cryptos are strong this morning, aren't they? On the back of all this, they're all up 2, 3, 4, 5%.
They started to move from the Besant comments yesterday, so about 2.30. So yeah.
Gold's just still on gold. It is an interesting one. Have we seen a high up there near 3,500?
In the medium term.
And if so, in the short term, where does it go down to? Because, are we going back to the 3.2, 3,150? There's some support at 3,100. Let
me show you what I did in the options market. So the options market, I sold a 3,800.
Yep.
For 16, and then I bought a 1x2, 33.50 to 3,200.
Yep.
So that's 65 minus 46 minus 16. So that costs 0. All right.
Correct. Yep.
So you've got 150 points of downside for no outlay, and your break even is down at 3,050. So I think it's probably got support around 3,150, something like that.
So I said there is support levels there at 3.1.
Yeah.
If you look at the chart, 3.2, it bounced around previously. Bit of support at 3.1. But it's a steep move down the last 24 hours, or even the last 16 hours.
It is. There you see my 007 short there at 33.96. Now, why is it 007, Tom?
Help me out, Rich.
Because, Goldfinger, do you expect me to talk? No, Mr. Bond, I expect you to die.
And you're very good at the accent as well. I do like that.
What a movie, though. What a movie Goldfinger was. They don't make them like that anymore.
Far too early for me. I can't believe that. Very good film, though. To be fair.
Yeah, Jugger in. Why did Tesla not go down 10%? Why has it gone up? It seems to be more a religion than a tech company. Does that make Elon the new Pope? I don't know.
I think some of it was also, and we haven't really mentioned this, Elon said that he may step back from the Doge project.
Yeah,
he may do 1 at most 2 days a week. He may concentrate on his business activities. Now, as Ronnie was saying on the desk, he has got various businesses. So does that just mean Tesla? Does it mean his other businesses? But I think the backlash from people in America, the backlash from shareholders has probably got to a point now where he's gone, okay, let's start to reconcentrate on my own businesses as well.
Yeah.
But, you know, it, as we said at the start, it was an aggressive move up, 10.1% move for that, up to 250.
For a bit of hope that he's going to be back.
Yeah, especially on the back of such poor results. And they haven't said they'll return to growth in their earnings reports either. So we'll wait and see.
What time are we on at Team? Well, I can't see a clock. How
10
ironic.
9 minutes to go.
I get your point now, people. I get your point. Producer Fred has stolen our clock. He's taking it with him. So, yeah, there we go. We're going to get that back. But, yeah, I literally can't see the time. 7:51. So let's take a quick look at currencies then, because that's another one that's really interesting. I am short euro in size. I am short sterling. I always think sterling's a little bit of a free hedge because you've got it, right?
Yep.
Your ISAs, your pensions sterling.
Your income.
And your income. And your money in your IG account is sterling. So therefore, if I'm short sterling, I'm just neutralizing some of it, am I?
Yes. Yep. I mean,
and at 134, I mean, I didn't think I'd ever see it there again.
cable's rebounded. You know, briefly get above 133, and you know, it has performed well recently. But I think everyone's talking about the dollar. We'll see what goes on. Where are we now? 133.24. So just above the 133 mark. Euro dollar below 114 now.
Yeah. Yen 141.60. So that's another one, right? You're getting such a big differential in rates there. Does that start to go higher again? 141.60.
I mean, it retreated from its sort of high following the Trump's, you know, softer Powell comments, I suppose you can say. But does it go back up above 144? Potentially, absolutely.
So dollar was up 60 basis points yesterday. It's higher again today, but against most of the crosses, that was about 1%.
Yeah.
Right, it's time for the like and subscribe. Give us a thumbs up, please, on the YouTube. We got 99 people watching right at this moment. Tom Roberts, what is your message for them? Should they subscribe to the channel?
Absolutely, absolutely. Subscribe, like, follow us, do everything you can.
Love
This
it.
is what it's all about.
Mr. Social Media here.
Yeah, unfortunately, I need to get better on that. Oil rich, just to say, up quite strong this morning as well.
Yes.
US crude above 64.50, 64.60 traded now, up about 1.5%, give or take. Brent's up as well, 1.5%. It's strengthening on risk on sentiment and positive inventory data, I was told.
And copper, $495. Whoa, those mining and oil. Let's see what the FTSE does this morning, but I fancy. The other stock that's moving big is SAP. SAP in Germany, really good numbers. Much better than expected there. Operating profit beat. So that's why the DAX is so strong.
Now the largest firm in the DAX, aren't they?
Yeah.
Yeah.
Largest in Europe?
Are they?
Potentially. I'm pulling that out.
Yeah.
Let's see. Right, we'll be back in 2 minutes for the opening bell. there's going to be some big moves here. Join us in 2.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome back to the opening bell. Now, I was thinking when I was across on holiday, how cool would it be to have this segment sponsored by the London Stock Exchange?
Be very good.
LSE, if you're watching, right, buy us a proper bell, and we'll let you sponsor. We'll let you sponsor this section.
We need a new bell, don't we?
We need a new bell. There it is. Now, Tom Roberts, you have some Reckitt's results for me.
Reckitt's, RKT, they're the makers of cleaning products, Dettol, things like that. They missed first quarter like-for-like sales, net sales growth, just not enough sales out there in Europe and North America.
Awful, actually, 1% sales growth.
Company maintained full year outlook, expects like-for-like net sales growth of between 2 and 4%, but only rose 1.1 and just a smaller increase. So disappointing mix there of results. Haven't got an estimate at the moment, Rich. They closed last night 49.50. 2 minutes to go, 49.30, which
right,
is just down slow.
Down 1%.
Okay.
Right, Reckitt's. Babcock up 2. So Babcock up 2. Croda up 1. Fresnillo unchanged. And Vodafone downgraded at JP Morgan. What do they know?
Any call
the
on
insiders with their Besant friend?
Any call on BP?
No, I think that was out. Was that out yesterday?
Yeah, but it sort of filtered through this morning. 369 up 3%. It's being called at the moment.
And THG up 2%. Right, Eric Jones across in the US of A asking, do LSE have a trading floor in London? They do, but they only have people on to ring the bell on IPO days, I think.
Correct.
So we could be the official bell ringing of the LSE each day. Somebody put a call in. Do we have a countdown, please? Because we don't have a clock anymore, so I can't see. 30 seconds to the bell. Right. We've also got Sainsbury's cut to hold from buy at Kepler. Sainsbury's have had a decent move. As
Vodafone cut to underweight at JP Morgan, as we heard earlier, at 62p.
God, I've missed ringing the bell. I haven't rung the bell for...
Not long to go.
I think I'll do it like this, actually.
Come on.
Right, we ready? Let's get this market off and running. That's a popper.
We're a £3.5 billion market cap company. We're doing well with our material objects we've got.
Right, Fresnillo down 4.5%. What is going on there? HSBC, the winner of the morning. HSBC up 3.9%. Oh, it annoyed me yesterday when we didn't show the stocks for the first 4 minutes. I was sitting at breakfast watching this show. Oh, HSBC up 4%. Entain up 2.5%. BP up 2.3%. Good call. Tom Roberts.
Fresnillo, you're right, down nearly 5%.
Yeah, that's the big loser. Prudential up 2%. Kingfisher up 1%. Burberry up 2%.
So Fresnillo Q1 silver production down nearly 10% versus Q4.
Right, that's what it is.
That's what it is.
Oof. So
First quarter production report. So anyone looking at the silver market, looking at Fresnillo, keep an eye on that. Now down 6.2%, moving down.
right, we've had Standard Charter open up 4.4%, and Glencore. Here they are, the miners. The miners running to the rescue. With copper at $495, we're seeing Glencore back up to $265. Ivan Glassenberg getting himself a bargain.
He's an astute man there at Glencore.
He's bought that very well.
Babcock not uncrossed as yet, if people follow Babcock. Being indicated up 6.5%, Rich, on the back of that FY25 results.
Now, Antofagasta, interesting story coming out yesterday. Elliott, having raised their stake in BP, being short Shell against it, they're also short Antofagasta. Now, this might have something to do, they've got a long position in Anglo-American, but their pair trade is long Anglos, short Antos, up in their face today, up 3% with stronger copper and with risk on in the FTSE. Rio's up 2.8, Burberry up 2.4. So yeah, anything China related basically is China.
And the miners doing well, as you say. I mean, FTSE up 103 points now, 1.2%, driven by the miners. Where are the banks today?
Well, our old friend Lloyd's back up towards 72.75.
I'm sure I probably owe you lunch. I can't still remember our bet.
We need to go back. On pull the
I think
tape.
I probably do, but veering near 73 pence, Rich. Barclays positive as well this morning. They were down in the dumps a bit earlier this month, but we're trying to recover, trading nearly 290 now, 289.5. And we're in NatWest. NatWest up 3.2% as well.
Right.
475.
Now, Legals. Legals has been an absolute belter of a performer. Remember, they've got that buyback going on, up 1.4, but that takes them up to 253. Now, 253 is, let's just check a chart there. That's as long as as high as I remember seeing them for a while. Is that a potential breakout there?
Just remind me of
Look at that.
Just remind me of the buyback.
They announced the deal to sell their, now what was it? Was it American or Asian business? They
American, yeah.
They sold one of their businesses. But look at how strong this thing has been since bottoming at £2.10 on that Monday, the 7th of April. It is now right back to where it was in June 2024. Now, of course, you've got a nice chunky dividend coming out. Such a big dividend yield there. But yeah, 253, getting back to where that was the crazy day. It was announced they were going to.
I mean, that chart from where was it down at 210? Did you say?
Yeah, this was a 210 drop, up 20% since that in 2 weeks.
Easy money. Should have seen it.
Well, you're talking about easy money.
Should have seen it. Easy money.
Where's our wonderful Vodafone, JP Morgan? What are you doing? Only down 75 basis points. Look at that. What a stock. The biggest bank in town downgrades you to a 62 pence target and boom, you take it in your stride.
I'll say it now, it will finish positive on the day.
Oh, it's a big shout.
It will finish positive on the day.
I must admit, I'd sell you some there.
That makes a market. There
Yeah.
you are, Rich.
Now, who do we know that's got the cheapest in price in Vodafone?
Yourself,
It's not myself. No,
Mr. Ward.
it's not Mr. Ward. It is Monkey Man.
Oh,
Monkey Man got in at 63.7 pence.
that's a good buy.
He must have just
Clever.
been sitting there with the button ready.
Boom.
I'm in.
Or using our limit orders capability and just leaving it there.
May well have done that. Yeah.
Well done, him.
So, yeah, Esar now buying them as well. He knows what he's doing. I know you're watching Esar. I saw you mention yesterday.
Babcock uncrossed and trading 784, 786, bit of a spread there, but up nearly 5% on the back of that FY25 numbers.
Right. BP now up 3.8%, 372. That is a really strong performance from them. But the biggest leaders in the day, Standard Chartered, HSBC, Glencore, all with the Asian exposure.
Yeah.
What about Europa? Over in Europa, we are seeing Airbus up 3.7. Seen anything in Airbus? It's a
no.
strong morning there. BNP Paribas, SocGen, Deutsche Bank. So the European banks are strong there.
Where's SAP?
Up about 2.5. Oh yeah, I haven't seen SAP yet.
Up nearly 10%, Rich.
Is it really? Oh,
238.5, up 9.2%.
wow.
That is a move and a half. It's traded 242 as a high on the open.
Oh, but would you look at that? It's not. So that's the daily chart there. And if we take it back to the start of this year, you saw we peaked in mid-February, as markets did.
Yep.
280, it's dropped back to 220 before today. So yeah, so must be a relief, bit of a relief rally there.
But it's topped estimates on its profits, hasn't it, on its results. But its cloud revenue was disappointing from what I read as well.
Oh, really? Right,
Yeah.
let's take a look at, here we go. So adjusted operating profit reaches 2.5 billion euros compared with expectations of 2.2. Overall, a strong set of results and illustrates the resilience and defensiveness of SAP's earnings trajectory. JP Morgan, right. That's the last time I'm giving JP Morgan any shop window this morning. Me and them have fallen out. JP is my new favourite J Powell. He's the JP. Forget Morgan. Right, so yeah, so it's SAP the best performer. What's the worst performer in Europe today, Tom Roberts? It is Rheinmetall.
Okay.
Not having the best of mornings.
Why would that be? Let's have a quick look.
It's just very volatile, isn't it? Oh, mind you, EDF haven't opened yet.
Yeah.
EDF on call, currently trading 12 euros. E.ON a little bit weak, Danone a little bit weak. But yeah, the other gainers there in Europe, Stellantis, LVMH, and Kering, as expected.
So, Rheinmetall being a defence company, has there been any news out? Just trying to think if there's anything.
Maybe the talk of Ukraine-Russia.
Ceasefires.
Yeah.
And peace talks. But, I mean, it's only 2.6%, but yeah.
Yeah. Luke Moore correctly stating Lloyds and NatWest eyes on the highs.
That's right, Luke. Lloyds will keep on going. Do we see 75p at some point in the short to near term? Potentially.
Would you have NatWest as a hedge on the other side, or you just like the space?
We have quite a few clients, I think I've said this before, who like the UK banks, who are long UK banks. They like the UK banks. They trade them regularly. NatWest, Barclays, Lloyds as the three rather than HSBC. No, I wouldn't trade NatWest as a hedge. if anything, I'd trade them together. But Barclays has performed well as well. So we had Barclays peak up at 310, if you remember,
Yeah.
and then sold off quite quickly. But Lloyd's is a steady eddy, isn't it? It trades within a range, but if it breaks out that range, then it could go higher. So we'll wait and see.
Good.
Boohoo raised to hold at Shore Capital as well. Let's see where they are today. Always a favourite with our clients, Boohoo, trading away.
Boohoo.
20.7p, up 4%.
I heard there was a few boohoos in the Roberts household as the car broke down a couple of nights ago.
The car did break down. Very annoying on the way back from bringing my son back from the sports club.
At least it was on the way back.
Hence, I couldn't do TV yesterday, so Ronnie kindly stepped in, and it is now in the garage.
What, to my benefit, though?
Due to MOT problems, car problems. It is 16 years old.
Go on. I am picturing a nice Jag. 16-year-old Jag, Tom Roberts.
It is a red VW Golf, 16 years old. Been reasonably reliable. It's an old friend, put it that way.
It's actually same as my girlfriend. That was her first car, and it went to the knacker's yard about 6 months
This
ago.
one may be going to the knacker's yard at some point. I've never been a car man, so...
Sounds like you could be boosting Tesla sales.
No, can't get an electric car because we live on a high street and they can't seem to put in a charger for whatever reason.
What do you mean you live on the high street? You're in a countryside estate. I can picture
Literally
it.
a high street in a town in the countryside, and they said they can't. I looked at electric car because Mr. Ward sings vocally about his electric vehicle.
He does.
And no, I don't know what's next. We'll wait and see. Something reliable like Vodafone, I would like.
Oh yeah, as reliable as.
THG, I think you mentioned earlier.
Yes.
Did they have an upgrade? Trading just shy of 30p, up 3.1%.
So you will know this stock well. I don't really. It's been controversial to say the least, hasn't it?
It's a well-travelled stock, and I say that humbly. Well-travelled in terms of it was traded a lot by the retail community.
Yeah.
It's had definitely its ups and downs, more downs than ups. And obviously it has quite a colourful CEO as well.
Doesn't mind a press article, does he?
Correct. But yeah, trading 30p. IG clients still quite enjoy trading it. So, it's one for the retail crowd though.
Yeah. Caused quite a bit of pain, hasn't it?
Yeah, it has.
Yep. Good. Right, we're going to go to a quick break. Then we're going to come back and look at Nike. Fast markets coming up. Just before we go to break, producer Phil in my ear, he was on a walk in Scotland and he sneezed, done his back in.
Oh no, poor chap.
Now you've seen, producer Phil has been in your seat. You've seen him. He's a young lad. Why is he putting his back out from a sneeze?
I'm not sure. I can't comment.
It's got to warm up before you go and do these things, don't you?
For a walk.
For a walk in Scotland.
Yeah. Up those hills.
Oh, it must have been a tricky wee hill he was up there.
It must have been a big hill.
Phil dying a death on in my ear here. Right, like and subscribe. That is what Phil is saying in my ear. Give us the thumbs up there, please. Give us the subscription. We're up to 438 subscribers. You lot, it was 395 when I left.
Keep going, keep going.
Keep going. We'll be back in 2 minutes for fast markets. If you want to make a cup of tea, go and do that. If you want to take a look at a couple of our videos on the page, there's one from me in Valencia on Monday. Doesn't show a lot of Valencia, but it shows a bit. It's our matrix of where the S&P 500 could go. And currently with futures at 5372, let's see, is that them topping out? It's a question. We'll see you in a couple of minutes to discuss it. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares,
indices, Forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Right, welcome to Fast Markets, the part of the show where you put your ideas and your trades into us, and I might steal them, I might put them on myself, or we can see is there an option strategy to better get your exposure on. But we are going to start today with Boeing, Tom Roberts.
Boeing, believe they've got US earnings today. They have come from really a sort of 7th of April low of 130, trading up to 165 at the moment. Had some news out in the last sort of 24 hours regarding they're agreeing to sell portions of their DAS business, which is their Digital Aviation Solutions business, to Thoma Bravo. All cash deal, 10.55 billion. They're doing this so it sort of to help them double down on its core business and get some cash through the door. Obviously, they've had their turbulent news, pardon the pun, recently. But yeah, one to keep an eye on, watch out on, A, on the results, but B, on the share price from the 7th of April move up, seeing if we can get any higher.
Yeah, it's tricky. I haven't traded this one in a while. I'm always scared of headline risk in Boeing. It hasn't paid to be involved, let's say.
No, it hasn't. But as it is starting to concentrate on its core business, as it's selling off assets, as its war chest is getting bigger, does it then reinvest that back into the business? And can we see some uplift from here?
I'm just looking at the chart to remember where this thing came from, and it is the 400s, isn't it?
Yeah.
God, where did it all go wrong?
I mean, it's come from a long way.
What's
and
yes, saying on it?
It's started to move up a bit since the beginning of April, but so is everything else. Analyst consensus is 19 ratings, 13 buys, 1 sell, 5 holds. It's got an outperform rating on the smart score as well.
Goldman Sachs 213 target. J. Powell Morgan 23% upside at 200 rally. Bernstein saying hold. Jeffrey's got a 220 target.
Barclays.
City 210.
Yeah, 210 with Barclays buy rating. City as well, as you say.
It's interesting. That's making me think selling puts.
So where would we sell the puts?
I could sell puts. Screen off there, please, gents. Let me just take a quick wee look into the world of Tasty, and let's probably look at the June expiry, I imagine.
Or even August?
So Boeing, let me see how many days. Right, chart up. Let's see about trading this one. How many days have we got until June? We got 58. Okay, so let's look at 58. God, jumps out straight away there. $2 for the 130s. I mean, yes, all day long.
Correct.
Well, I mean, why would you not?
Worth keeping an eye on that.
Do you go up to 140 and take in $3.50?
I think the 130 is better value. You have got, as you say, the headline risk on the numbers. You don't know what they're going to say.
It's only a 10 delta, though.
They've come from a long way down. Long way from where were they? 420, I think, 430.
Yeah.
165. So what you would sell 130 puts.
Yeah.
$2 it's going to cost you.
I'll go 130. I'll go 135 and I'll try and get $2.50 for them.
Okay.
Yeah. That's almost 2%.
Worth a go.
Yeah, because I mean they're in a bit of a holding pattern just now, aren't they?
They are. They are. Good work, Red. You're at lunch today when they open, so I'm sure I'll be taking your orders.
That will remind me.
I'll send you a message.
Yeah.
I'll send you a message.
Excellent. Right. Yeah. I've away from the numbers has put 737 Max. I think that'll be to the question, where did it all go wrong? You're not kidding. Okay. So Nike. Now, I got very excited about Nike when I was away, right? Because it got down to $53. And I've been waiting for an opportunity like that in that company. That it's the perfect storm, the absolute perfect storm, right? They've had their terrible CEO, they've had a sales slowdown, they've had the product go out of fashion, they've now had $1 billion restructuring costs with Elliott Hill, then they've had Vietnam tariffs, then they've got China tariffs. I mean, it couldn't get any worse.
Along with an interesting advertising campaign and marketing campaign.
That's right, yeah, maybe not the best one.
Correct.
Start off slow. So I put into my ChatGPT, what could Nike do? I love it. ChatGPT come back. Yeah, Nike's been rough, underperforming for nearly 3 years, margin slipping, inventory issues, North America soft. I said, what could it do structurally? If I was Elliott Hill and I was going to do a strategy day, what would I want to give in that strategy day to make the stock turn around? So it obviously says product innovation, right? It needs a new Air Max or a Flyknit kind of moment. It needs cultural relevance, making Nike cool again, less Travis Scott, more boundary pushing new artists, TikTok culture leaders, Gen Z designers, revamp the brand.
Modernize it is what it's basically saying. Modernize the brand.
Yeah.
Move the brand forward into the era where we are now. TikTok, influencers, etc. What does that bring, though?
Well, that comes on to another point. It says restructure its brands, potentially selling off Converse.
Okay.
Now, Converse they bought in 2003, I think it was, for 200 million. It now does sales of 2 billion. Yeah. So what could it get? Could it get 3 billion? Right? You take that $3 billion and you do a bit of share buyback, you help that for some of the restructuring charges to make the core brand superb again, the Nike swoosh. I think
But
that
you're
would be
losing
taken
sales of 2 billion a year by selling off that asset.
Converse.
Still 2 billion a year. You're selling it for what, 1.5 times sales, you're saying?
Mm-hmm. I don't think you could get much more than that because sales have been slowing.
No, but you've got good regular income there on the revenues of 2 billion.
Yeah, margin's not amazing because they only sell for, what's a pair of Converse, like 60 quid or something.
Yeah.
So yeah, I think there's so much to do for Elliott Hill, and he's the man to do it. The buyback's ongoing. There's lots of options there, and the stock is making higher lows.
Yep.
Have I got that right?
Yep.
Higher lows. Yes, the last 2 days it has been particularly strong. And well, there you see the chart. Oof, the chart is ugly, isn't it? That is from late 2023 when the stock was at 120. And there's that perfect storm taking it from 78 down to 53 at its worst, 52 at its worst, now at 57. I think now's the time.
It's gone from $80 on the 10th of March down to $53.
That was him saying that there was going to
Last
be
week.
another quarter of bad numbers,
Yep.
another quarter of restructuring.
So if the numbers are worse than predicted next quarter,
I think he's kitchen sinked it.
do you? Okay.
I think so.
Why aren't we seeing more buyers now then?
Well, Vietnam,
Yep.
China.
But Vietnam are coming to the party. Tariffs won't be as bad as they
A
think.
sentence you've never said before, is it?
No. If you're trading this, how are you trading it, Rich, for our viewers?
Well, that's the tricky one, isn't it? I mean, look, I've already got a position. Don't you worry about that. We have got.
You've got the stock or you got the option, sorry?
I've got options in the Tasty account. I've got 200 shares I bought yesterday for the first time in my IG account.
So you're long stock and you're long the options by being short puts. What have you got there? Hang on.
I am actually now long 57.5 calls
Yep.
from May. I'm short the 67.5, right? It's not going straight up.
Okay, yep.
I am also short 65 puts for June. I'm short the 67.5 puts for Sep. And then,
60s for deck.
well, that's actually part of a separate trade. That is part of this one. The deck trade is selling the 60 puts to buy the 77.5 calls, shorting the 97.5 calls. So, i.e.,
So you got the layers in.
the swoosh.
Yep. Swoosh. You're selling 97.5s.
Yeah, I mean, look, I'm happy to take my money there.
Yeah, 240 days away.
And that was a really nice trade because it cost 6 to get the 77.5s. I received 2.5 for selling the 60s, and then I received 2 times 2. So that was a zero trade.
Net neutral there on that one.
Yeah. But of course, we're still a few dollars under there, so it's certainly at loss at the moment. So yeah, that's Nike. I think I really like the stock at 53, 54. It needs some headlines to get back above 60, I think.
Yep.
And last night it was at 50. It touched 59. So we'll get the all hours. Andrew McKelvey, why not buy JD Sports if they've got a wider range of brands giving downside protection, but will ride any Nike recovery? He's got a very good point that it will ride the Nike recovery. However, I think that JD is the next stage, Andrew. So I think you'll get core Nike really starting to get the turnaround, and they'll expand the multiple, right? And then you'll get the sales come through. JD Sports will be 3 to 6 months after.
A leg on, exactly.
A leg on.
Um,
But yes, it's a fair point.
FTSE pushing near its highs as we get up to 8:30, 1.4%.
Whoa, take a look back at that. shall we?
84.46, and just looking at a few of the London numbers. Where's BP now? Up 5.2%.
Is it really?
Yeah,
Oh,
three.
that's going to help the options account today. I'm short the 420 puts.
Okay.
It's be a shocking trade.
377.5 trading.
So screen up on the update of the FTSE there. It is BP leading the way, taking out for Expo. Standard chart for Expo up on the...
Silver production, wasn't it?
Oh, no, that was Fresnel.
Fresnello, sorry.
For Expo on the peace talks.
Yes.
53 pence. I mean, that one was in the 70s, wasn't it? Then Standard Chartered, Glencore up 267 now. Anglo-American and any new ones? No, not really.
No.
IAG up to 261. WH Smith had a bad day yesterday. I noticed it got below £9. That one's really struggling. I tell you what, I took a picture. Guess how much I was in WH Smith. I'll have to try and find this now. I can see why they're so reliant on this airport business. I can't remember what. Go on, Tom, to fill in for a second while I check through my pictures of myself playing paddle.
Just looking, Wizz Air was up there, Ryanair's up. Airlines looking a little bit stronger, obviously IAG as well.
Here it was. Right, salt and vinegar discos. Right, this is WH Smith. Guess how much this was, people. Salt and vinegar discos grab pack.
£2.50.
And one of those almond like eat bars.
Okay.
Like a Nature Valley kind of thing.
Yep.
Right? Guess how much for the two of those?
£6.
Yeah. Anything else? £5.10. £5 for a bag of crisps and a snack.
You and I have spoken about this before. WH Smith on the high street,
I still bought it though.
lost and gone. WH Smith in the airports,
Yeah.
it's where they're going to make their money.
£2.60 bottles of water.
Closed market, people have to go there basically.
Yeah.
Do you go to Pret in the airport and pay £3 for water or £2.60 in WH Smith? And everyone seems to still flog to WH Smith.
Yeah. Right, just to summarise for Barry O'Sullivan, just talking about what is the news for the positive wave. The positive wave is Trump confirming what Besant said to an inside group yesterday, a closed-door investor group by JP Morgan, that tariffs will not stay as 130, 140.
Unsustainable
Yeah.
levels.
Unsustainable levels. That's coming down. And also that he's not going to sack Powell, right? So Powell stays. China is going to de-escalate, so we can expect positive headlines there. Potentially at the side of the Pope's funeral, Tom thinks. Potentially at the side of the IMF meeting. You've got a few avenues there.
The word there the market's looking for is stability, and he's trying to give a bit more stability to the markets. He's trying to be a bit more sensible. Maybe people have given him a little prod just saying, this is what you need to do.
Definitely
Well,
said to him.
the markets are controlling you, as you said earlier this morning. Try and be sensible, put some stability back in there, let the markets recover, and let's get back on a firm footing.
And he's bought a load of futures.
We can't.
Right, ESAR is on the way. Angeline and ESAR are going to talk about managing risk during turmoil, like we saw on Monday. But also, I fancy they touch on what about when we come out of that turmoil? What about when VIX is going back down through 25? Right, there is the VIX daily chart from August the 5th. Nice similar pattern there, isn't it? It's a little bit of a fatter bell curve this time, but it is coming back down, and that is almost the lowest that we've seen it now. Oh, are we out the woods?
Not yet.
We know where the exit is.
We know where the exit is, but we don't know how long it's going to take to get there.
Yes, I can agree with that.
So will vol still be around in that short to medium term? Yes.
I don't think it's going to 18, but I think it's 22 to 27 rather than 27 to 40.
Support above 20, 20 and a half, with probably a ceiling up at 30, 31.
Yeah, fair. Good stuff. Right, thank you all for joining us. Oh, it's good to be back. It's good to see you lot. Some great comments there this morning. Thank you very much for those. Angeline with Isar, and then Ange and I will bring you. Actually, I think Ange and Isar can do the opening.
Keep subscribing, keep liking, keep going.
He's on it. Good stuff. We'll see you in 3 minutes, and the team will be here.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There are too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hello, welcome back. It's Issa and myself here on Trading Psychologies.
Yeah. Welcome back. Welcome
Thank you.
back.
It's great being back. I was going to say, you did such a brilliant job that now Rich and I can go on more holidays.
We barely survived. But what I will say is, even though Rich was on holiday, he was in the chat commenting away. So I don't know if he knows how to take a proper break.
He's quite a workaholic. Quite a bit of us are, but we love our job, so that's why we are here.
Nice and easy, right?
Yeah, and really it writes itself when we had the last few weeks.
Right, it feels like the news just doesn't stop, and I think especially some of the comments last night about now Trump being kind of generally supportive of Jay Powell and the
Surprise.
Yeah, the prospect of like cooling back on some of the China tariffs. Like I think you're seeing markets like really whipsaw. I think you saw like not great Tesla earnings, and so like it's a very muddled picture at the moment.
Yeah, and my humble opinion on the whole thing is it's not so much Trump versus JP, it's Trump versus the bond markets.
Yeah.
You know?
Well, I mean, there's a very explicit aim from Besant and from the Treasury to try and lower bond yields, while at the same time they're trying to do all this kind of disruptive policy that might introduce uncertainty. And so I think it's definitely a tricky situation. And with so much US debt needing to be rolled over, I think they're very, very sensitive to how the bond market reacts.
So let's talk about navigating these markets, because lots of people, it's kind of easy or relatively easy, shall we say, when you see the turmoil unfold and when to exit, right?
Yeah, and I think I guess it's the kind of market that generates a lot of emotion, I think, as well, right? And so you're right, lots of people maybe want to exit their positions, but also you see kind of drastic changes in the environment that you're in, like minute by minute almost.
Yeah. So fear and greed index. Let's maybe start on that. Or do you want to start with something else?
I think we don't have that much time today, but there were three things I wanted to talk about briefly. I wanted to talk about fear, I wanted to talk about hope, and then I wanted to talk about agency. So maybe we'll talk about each of those in turn. So if we start with fear, I think you've got the classic CNN fear greed index. So maybe we can pull that up on the screen.
Yeah, here we are.
I think this is like a very, very commonly referred to tool to kind of measure how much of the market's in that kind of fear mode versus the greed mode. And you can see that we're in just the edge of that extreme fear level. We're at a 25. I think less than 25 is like extreme fear, 25 to 50 is typically fear. And so I wanted to talk about two things, which is number one, why are people scared? And I think that we've spoken about that kind of at ends for the last couple of months, but like I think it's both an uncertain and an ambiguous environment that amplifies a lot of the uncertainty and amplifies a lot of the downward moves. And when you have a situation like that, people's estimate of downside probabilities starts to be skewed. So we have what's called a negative salience bias, which is when we're reading news, for example, we tend to be more our eyes are drawn more to negative news stories than positive news stories, and that kind of continues to amplify emotions and drives a lot of that kind of excess sentiment in both directions, actually, when you have positive news but also when you have negative news.
Producer Phil also chiming in, because I was away the last 2 weeks, but he was saying that at one point it hit 4.
Yeah. It got to one of the lowest readings ever, and I think with that being said, I want to talk a little bit about how this index is calculated, because I think a lot of people look at this number and they're like, oh wow, emotion is very high. And actually, this is not an emotion-driven index. If it was an emotion-driven index, you would see things in the indicators that go into this index to like things like what is the average sentiment of news stories, or what is the ratio of negative to positive news stories. That's actually not how this index is calculated. There's 7 things you can see there. The first one is how the S&P, if you scroll down, actually you can see them one at a time. So maybe let's start with
it's a momentum tracker.
Exactly. This is the momentum tracker. It's not a emotion.
Yeah, I was paying attention during my economics class.
Yeah, well, you can
Barely.
see. So of the 7 things, the first one is it trading well below the 125-day moving average? The second thing is what share of stocks in the S&P are trading like relatively near to their 52-week highs. The third is looking at a measure of price breadth. So how much are you seeing individual names drive the price action versus the market as a whole? The fourth one is about the put to call ratio. The fifth one is about the VIX and what implied volatility is on a kind of 50-day moving average. And if you continue scrolling down, one of them is about thinking about kind of stock to bond allocation, and one of them is looking at the spreads on yield. If you have a look, so most of these are either in fear, extreme fear, they're in kind of almost exactly neutral, or actually the yield spreads at the bottom are in extreme greed.
Yeah.
And so, like, actually the picture that you're seeing in the momentum indicators they use are actually not straightforwardly just what is the emotion level that the market is feeling. And I think when people look at an index like this, they often think, oh, wow, that's a gauge of market sentiment. That's actually not at all what this index is looking at. That being said, we are in kind of a heightened emotional state, and I think there is quite a lot of fear going on, but I think fear is not the only dominant emotion at a time like this.
And it's interesting that we pick this apart, because that's kind of like what technicians and technical analysts do. You don't rely on one, but you combine 2, 3 to give you a better view, so that you do not have, and this is probably...
I agree with that.
Yes.
If you actually look at the kind of indicators they use, they are often very, very correlated with each other. So if you're looking at when you're trending below your 125-day moving average, that tends to be moments where the put to call ratio is skewed more towards puts, because you probably just had a correction. If you're looking at breadth, you often see some of these larger moves are associated with poor breadth. And even the kind of bear market rallies you see are often a small number of names driving it. So while I agree with you, like, that's definitely what we should be doing, is looking at different data points. I actually think this is not the best of indices to think about that, because it's using several indicators that are extremely related to each other, and the ones that are less related to each other are actually giving us different signals. So like the yield spread is a materially different indicator to what stock prices are doing, because it's telling you about credit conditions rather than just generalized financial conditions. And you can see that actually the yield spread is giving you not an extreme fear reading. And so I think you have to be really, really careful about using some of these aggregated numbers, because what tends to happen is a lot of these move in tandem with each other. And so the number flips from like extreme greed to extreme fear much more quickly than it would. So it's if you imagine, like, if you've ever managed a project, sometimes you use like a RAG status for a project. If it's going well, it's green. If it's going okay, it's amber, but there may be some risks. And if it's going badly, it's red. And if you have a really bad project manager, then projects rapidly change from green to red without stopping off at orange. I think this is one of those indicators that tends to flip from like green to red pretty easily without spending too much time in the middle.
So this dovetails really neatly to what I was about to put to you. So in the kind of turmoil, unprecedented, that we've seen in the last few weeks, how do we then avoid multicollinearity?
Yeah, like when all the correlations go to one.
Exactly. And
I think there's, honestly, it's very, very hard to manage. It's why you've got assets like gold doing extremely well, even despite the pullback today. Gold has still had an unbelievable run. And I think that's because gold offers a genuinely negative beta versus some of the other assets in your portfolio at times like this.
Let's count my chart so I can bring up gold.
And I think, yeah, if you bring up gold, you can actually see like the run has been unbelievable. I think the other alternative is just to hold cash. That's the kind of Buffett play. I think in both of those situations, like, it's really, you can see if you're going to pull up gold.
Here we are.
The gold price, like, really, even taking into account the most recent pullback, I mean, look at that run, right? It's unbelievable.
Yeah.
And I think that's after several years of gold just kind of hovering around the same level. And it's a good example of where, like, when you do have this kind of heightened fear, people are worried about correlations going to one, and gold provides a genuinely different risk profile. And I'm not saying necessarily it's the best fundamental play in the world, but it provides a different risk profile. And so then people are looking for just things that are uncorrelated. And yeah, you can see like the stock market's up today, but gold is down. if you look at other commodities that you can see, for example, silver has been pretty uncorrelated. So it's not got negative beta, but it's kind of got neutral beta. You can see, yeah, exactly. You can see it's basically been flat.
Lots of people like trading silver because it gives that uncorrelated sort of link. And it's also more volatile compared to, obviously, gold's just been a one-way game.
And I think where gold has been kind of on an upward trend, silver has been kind of range bound so far. So I think it'll be interesting to see if it continues to respond in a very different way to what gold is doing. Typically what you have historically seen in silver is it lags gold significantly and then the move is extreme, and it kind of catches up. So we'll see if that happens this time. But I think if that's kind of the fear, I think the second overriding emotion is when you do get positive bits of news, then the hope machine goes into overdrive.
Overdrive, yeah. And then you become almost like over hopeful, right?
Yeah, exactly. And you see a lot of the herding effects that we talk about when there are extreme volatility and extreme sentiment shifts. And so I think you can see we've had a kind of hope-driven movement in the last kind of maybe day and a half.
Yeah.
And like that is quite a significant move actually from some of the lows that we've seen.
I'm trying to manage my hopes as well because, like, for example, I've got this parabolic saw here. And I am looking for a good bounce. And to me, at the moment, I'm starting to see that in the US 100.
Yeah.
And so it's more about, I find in these times of turmoil, it's more about stripping out the noise and trying to almost have someone, or it's always helpful, like Issar and Luke, and they'll see me walk over to try and debunk your theories.
Yeah.
Because
it's almost the game, right?
Yeah.
How quickly can you debunk a theory?
Yeah, exactly. And so if someone can debunk your trading theory, it means that you possibly might have the wrong perspective, or it's time to re-look. You know, well, if you sail, it's like maybe change of tack time.
And I think the last thing I wanted to talk about was agency, and I think it's very related to that, right? So agency is the degree to which you feel in control of how your portfolio is doing and how your positions are doing. And often during moments where market performance is very headline driven, people feel extremely low levels of agency because it feels like, okay, well, Trump is going to say whatever he's going to say.
He's going to change it the next day or the next moment.
You've got like Tesla earnings, like, I don't know, that's kind of always very uncertain. It turns out it was very negative, but the share price has gone up. Like, who knows what's going on? And what you tend to see is actually you have asymmetric agency estimates. So when things are going your way, you assume that you're an amazing trader. And when things are not going your way, you're like, oh, well, market conditions are really bad. And I think that gives you a bit of like false certainty in an environment which is very uncertain, right? And I think you have to internalize that uncertainty. And then I think the second thing is that often people don't think deliberately about the things they do actually have agency over. Like a good example is position size. That's something we have control over.
And putting your stops and tighter stops in times of turmoil, which we had a huge discussion with some of our clients recently.
Yeah, and like also like trading frequency. So a couple of weeks ago, I spoke about the risk of over trading and what might happen when you get into a mode where you feel like doing nothing is inactive and bad, and so then you want to trade to try and like take advantage of all the opportunities. Well, actually choosing to trade higher frequency might lower your optionality when there are really big moves, and so that can then impact kind of what your returns are over time. And so you actually do have agency over a bunch of different variables, and it's really worth thinking about how can you exercise that agency to drive returns. And then where you don't have agency, try to be less asymmetric about how you think about things.
Yeah.
So when stuff does go your way, like try to like really reconcile the fact that some of that is news driven and a little bit out of your control, so that when stuff does also not go your way, you can like kind of balance that on both sides.
Yeah.
So I think thinking about where do you genuinely have agency, and for the areas that you do have genuine agency, trying to exercise that agency, and where you don't have agency, let's be honest with ourselves. I think trying to manage hope when there is positive news and make sure that you're not overly swept in some of these big market moves upwards, especially during kind of bear markets where some of the rallies can be really extreme, and then trying to manage your fear levels and also understand what the real fear levels in the wider market are, not necessarily being super reliant on something like the fear and greed index.
And timing of trade is also agency, right?
course,
You can control that, trader friends. You can control that, and a lot
like
of
even just setting a limit entry, right, is like
Yeah.
a really good example of trying to have more control over timing.
yeah, and trailing stops. I use trailing stops more when we have high volatility. A lot of the times in the show, you hear myself and Rich talk about how to also look at the options side of things, so you understand that when volatility is working against you or might be working for you, depending on how comfortable you are with volatility. But you see us looking out into the following weeks and looking at that figure just above the white line there to show us, compared to, normal times, how high is that figure, the options figure on this chart here, compared to normal times. And that gives you a good idea of the height of the wave that's coming your way.
Or at least what the market expects, right?
Exactly.
Yeah.
Quick question. We had one earlier on the chat about, how to time your entry. I mean, you can't really time your entry. No one can call a top, no one can call a bottom successfully, right?
I think the thing that's really important is being concrete about what your thesis is and how your entry feeds into that thesis. Like whether that's if you're someone who trades using like technical levels, being very clear about what those technical levels are. I am less of a technical level trader and I'm more of a kind of like medium-term thesis trader. But that being said, that then means that, okay, if I'm looking at a single stock name, I have a price that I think is attractive and I'm expecting to hold for at least a certain amount of time, right? Especially if I'm looking at, for example, my ISA portfolio. So actually what I've done is for a bunch of names that I do find attractive, I've set thresholds and alerts that will trigger for me to have a look at the equity, and then I've got automatic kind of limit orders slightly below that where I think anything below that is a good price. And so trying to use the thesis to lead the timing rather than the timing to lead the thesis is really important.
Yeah, and having that thesis written down prior to the trade is also good at keeping you on
we
track.
talk a lot about trading journals. That's one of the best things you can do to drive higher quality decision making.
Yeah. How much time we got left, guys? We've got just 5 seconds left. They say no time. 5 seconds left. Just in case you're wondering. Producer feels like, I remember that. Issa was so engrossed in the chat, people, that we
nearly missed my slot.
Yeah, we had to send Cam over to walk over to, hey, we know you're like messaging on the chat, but you need to come right now. It's great.
Yeah, apologies. This was a few minutes shorter than
but lovely to be back with you, and we'll see you on the floor.
Yeah, it's great to have you back, and I hope people are managing the tough market conditions.
Yeah, totally. Hit the like button and the subscribe. Any questions to myself or to Issa, please email us and I'll get it in front of him. Thank you. We've got...
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal. And I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach. And I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Hey, welcome back to All Sessions with myself and Rich and his
The
brand.
bell.
Yeah, and the bell.
For the second time today. Do we ring the bell on New York? Not sure. Not sure.
I don't know.
We need a countdown because we don't have a clock.
Yeah, we need that clock back.
Right, let's get these prices up then. Ooh, Tesla, 249, Ange.
Whoa.
What are you going to do there?
I'm very bearish Tesla. So,
are you?
Yeah. And unlike Andy Gavin, and so I kind of think it's going to have a lot of pain still. So I'm going to steer clear for now.
250 trades up 5. So Meta up 3.8. Palantir back towards the 100 level, $98 trading.
Amazon.
Yeah.
Wow, up 3.8% there.
Nike, good to see them, 58.60. That's going to help. So I'm very short calls on the S&P at like the 5,500 level, but then long Nike, Bitcoin, and some underlyings here.
Yeah, well, you would be quite happy like yesterday. Nike was
Get those
up.
stocks
Look,
back up.
Nike back up again. So your swoosh.
Why are you taking my stocks away?
Your swoosh is in
Swoosh.
play there. You know.
Swoosh is doing all right.
Yeah.
Swoosh is doing all right. AMD up 3, Broadcom up 3, Apple up 2.3. Oh, I don't know. Is this too much?
Risk on, people.
The problem is when you've got vol coming down and you've starting to get, you know, those short gamma positions, they have to buy it on the way back up as well. I think all the CTAs are short. So if the CTAs are short, the derivatives traders have got to buy futures and people have de-risked, then it is hard to go against.
They're all trying to get back in the game, right?
That's
So Delta Airlines also up 2.6% there. Interesting given a lot of the moves in the oil market at the moment, and United as well having a bit of a bump up recently. American.
Disney. What do you think Disney here, Ange? $88. I always think of Disney as sort of 95 to 100.
Not so much. I think back in the day when, you know, their parks and everything was going really well, then yes. But I think right now, Disney is more fair play at around, my humble opinion, around 82. Just because I think it hasn't swept aside its leadership problems, its structural changes, the fact that its Disney Plus still hasn't yet gained on the march against Netflix.
Does Emma not like Disney Plus?
No.
Really?
Yeah. Believe it or not.
She's too adult for that.
Actually, well, believe it or not, it's all about TikTok and YouTube.
Oh no! Oh, there's
Yeah.
a program on Netflix you don't want to watch then. It's all about the kid YouTubers and how the mums drive them. One kid was making $500,000 a month.
Really?
That's like your salary.
Wow.
But yeah, so she's into the YouTube and TikTok and everything.
Well, it's hard to stop them because even if she doesn't have a phone, some other older kid will have a phone,
Right.
and then she'll be kind of like watching and looking at, you know, that screen. So it's really hard.
Well, watch this documentary. It's enlightening.
Netflix, I have, as I told you, I've cancelled my
Oh, you have?
I have.
Wow.
Because it went from, I had that deal, right, $9.99, and then suddenly became $16.99.
Yeah.
So I have cancelled.
But there's a new series just about to come out.
Don't say that. You're just doing that on purpose, aren't you? What?
Great series.
Eli Lilly, up 1.5% there.
Yeah, whoa. That one's, I've really been crap in that one. So I had the 840 to 980 call spread, call ratio, and it got down to 750. So I sold my 840 calls. Well, I sold the structure straight back to 840. So I've really had a bit of a shocker there.
Well, don't worry, because you can still get back in. So Eli Lilly is a fundamental play for me because I think Novo is being beaten down at the moment because it's not been fast at reacting to other entrants into the skinny pen market. But Eli Lilly on the rise there, people. This is a daily chart there because its pill apparently helping diabetes patients lose 7.9% of their weight in the study. And don't forget, this whole GLP-1 diabetes thing is a trend that will not go away because it's also helping people cut down on tobacco. Ex-producer Fred, are you listening to this? Yeah. And all manner of things. So it's like the wonder drug, right?
Yeah.
Reduces heart.
But it's not
issues.
obviously not just for diabetes patients, right? It's everybody's getting involved now.
Exactly. Everyone who is over a certain weight can now ask their doctor to be prescribed.
Asking for a friend. What's that weight? Is it your BMI or is it kilograms?
It's your BMI, and also if they think that you are at a weight that is detrimental to your health.
Okay.
You know? So like in South Africa, for example, there are even outfits that if your doctor won't prescribe it, you can ask for a self-prescription and they'll send it to you in a box marked beauty. Yeah.
Beauty and the Beast.
Yeah.
they might misaddress mine.
Ford, up 1% there.
Yeah. So Ford, a nice move in the TLT there. Treasury bond ETF up 1.4. Yeah, so all the auto companies apparently got together to speak to Trump yesterday about the parts tariffs. So there's, we're continuing to see, sort of more coming together. Because it's not often that GM and Ford would both go and speak to the government together.
Yeah. Calling out United Health as well, up slightly there because it had that big, did you see that huge drop on Friday?
Oh, no, I didn't.
I was off on that day. Thank you very much for that much needed break, Rich.
Yes, how was that?
It was good. It was good. I
shows an interesting couple of weeks to be away. Thanks.
It wasn't timed that way, but have a look at United Health. Look at that.
Oh, what happened there?
That was because of the surprise earnings miss, and also this is due to the higher medical costs through the Medicare Advantage demand, which far exceeded expectations.
Wow.
There you go.
Right, so yeah, look, Tesla consolidating around that 250 level. We've got a bunch of the Mag 7 up around 3.5 to 4. We got Nike up 3, and that's about it. Salesforce, feels very positive. That's on top of the moves yesterday as well. So let's just take a look at how that is leaving us on all the indices globally. We are up 1.5 in the FTSE, up 2.7 in the DAX, helped by SAP. We're 53.88 in the. I want to go against it, but I know better than once Americans start buying, once the CTAs start closing, once the derivatives guys have to cover. What could be 54.15 today?
Possibly.
Another.
I like what you're saying there because you are. It's music to my ears, Rich, because I'm looking at my Tech 100 and whatever you're saying is all aligning with my parabolic saw here, which is pointing at this parabolic saw. You see the dots there?
What is?
I'm trying to
never heard of
filter
this
out.
before.
I'm trying to filter out the noise, you see, and the parabolics are the general note to the
What's the
friends is
second word? Parabolic.
SAR, S-A-R.
SAR.
SAR. Yeah,
Okay.
is when the dot's at the bottom, it is pointing at a bullish time ahead. If it's on the top, it is pointing towards a bearish time for the charts. And at the moment, if you look at my yellow line there, you know, it's got a very nice sort of, you know, it's coming away from that yellow line where we saw that bounce back 8th of April. And it's still showing confidently the green dots at the bottom. So I'm hoping that, you know, everyone does come back in slightly.
That's a new dot plot for me.
Eric
Not the dot
Jones
plot I'm used to.
saying support and resistance on the chat. Lots of people commenting on the chat, actually. Bigger Beer is saying that he loved that United Health drop. Had some nice puts on that one.
Oh, well done, Bigger BS. Beautiful. PayPal, yeah, Monkey Man, I'm with you. Don't use PayPal. Don't see the point in it. I am Revolut all the way. Yeah, just don't get it. Expanding crypto offerings. There's plenty other places that you can get crypto, not on PayPal, right?
No.
Including IG.
No. Soon to be fixed. Revolut, I'm a big fan because you can send money really easily to overseas accounts, and it calculates everything. It's very clean, tells you exactly how much you are paying. He's put in stock trading now. He's put in crypto trading. He's business accounts. I call him he, sorry, because he's my ex-colleague at Credit Suisse. Well, I'm saying Credit Suisse in the background. Cam, are you trying to say something? Looking at a lot of the markets, really, really good to see this kind of bounce given, we had such a few traumatic weeks also. S&P now, what is it? 14% from the high was that from Tuesday's close. Let's see where it is now.
Well, it's still down 14%.
Yeah.
Well, this, FTSE up on the year and S&P down. Well done, Trump. At last, making the UK great again. Right, gold, we're seeing continuing to sell off. That one has seen its highs. That's it. I am now short. 3,310. I think it drops. That's got another $100 in it there to drop. The oil to gold ratio got out to an incredible point.
So where do you think gold will drop to?
3,200, 3,150, something like that. So, Eric Jones, daughter works at Credit Suisse. Fantastic. Great place. When did I start there? My first day walking into the Credit Suisse building was 24 years ago.
Wow.
The great company that it is.
And did you say you went to South Africa as well with Credit Suisse?
Johannesburg, on the New York Stock Exchange. And then we've got a question, what do you think about Man Group? So Man Group bought GLG, didn't they?
Yeah.
So GLG, wonderful hedge fund back in the... They really got caught out by Lehman because Lehman were their prime broker. So when Lehman went bankrupt, all GLG's positions were frozen. And that's actually what contributed towards causing that big Volkswagen spike when you had too many shares that were short for the amount that were available. So yeah, anyway, GLG, still a fantastic hedge fund, but yeah, I think Man Group bought them. But yeah, give us more of the question there. What is it you're looking about Man Group investing as a stock?
Kifek, I take it from your logo here that you speak Arabic. Man Group's share price, I hope you're going to tell us that you shorted if you traded that recently, because look at that.
Why is that?
Oof. Let's just look at the chart.
Yeah, why is it?
It's not
that's
one
just
that
the usual, is it?
it's not one that I normally trade, but yeah, it's quite a drop there.
It's a disaster.
Yeah.
Right, Angeline. What? Yes, we've got.
We've got market measures after this. Our son is going to join us a bit later for natural gas with me. So if you like to find out how to trade natural gas, he comes from an energy background. I like commodities, as you know, so we'll talk a bit about silver and gold as well, and some of the technical levels we're looking at. And just speaking about that, I noticed something whilst Rich was talking, and I was looking at the US 500 or the S&P 500 chart, and you kind of saw me glance away. I wasn't looking at Rich's derriere. I was actually looking at the chart because I have a fib on the right-hand side there. I don't know whether you can see this, but I'm trying to zoom in for you. And of course, the retracement there shows you potential pullbacks, right? And we are seeing a 61.8. If a technician usually has to choose a figure, the most important figure out of that retracement is 61.8. It's like the magic number out of
Somebody
all of
wrote
them.
this on my TikTok the other day, and why?
Because that's kind of where
It's just made up.
the market's looking is at that figure. So if there's a herd mentality going on, everyone's looking for a pullback at around that point.
But it
We
is
are kind of
completely made up.
Well, if everyone's following it, then it's not.
So it's self-fulfilling because it's a number, 61.8.
And if everyone's drawing from the same,
Everyone's drawn the same things on their.
yes.
I mean, that's just rubbish.
But when algos and everything are drawn with that basis in mind, then you get. We know everything about the markets. It's all about trader behavior, right? Another question on the chart there from our friend whose logo is in Arabic. I can't read the Arabic. Cheap enough to buy or more to go down? Talking about Man Group. We will look at that after this. S&P 500 EPS-based projections. Let's talk about that first.
Yeah, so this was something that we did last week to try and give you the matrix, right? And you've got the potential PE ratios on the left-hand side. You've got the potential earnings across the top, right? Now, this is where we were back in January, the 280, right? That was fantasy land, and that is gone now. So we can completely forget the right-hand side trajectory. That's why we got up to 6160, because of that blue sky PE ratio of 22 times earnings and 22 times 280. So you take the PE ratio, you multiply it by the earnings, and that's where you get the S&P 500 figure there. Now, the reason I've got this back up is because I did a 6-minute video, right, on the potential for where we're sitting, right? Where are we going to finish the year in the S&P 500? What is the correct earnings figure? What's the correct ratio? And what changes exactly what we use? So the reason that I am telling you this is we've got on the YouTube page, if you go to videos, right? So you might be at the home page. If you go to videos, you can scroll down and you see there's me in Valencia there, Ange. There's beautiful background in Valencia. But that's about a 6-minute video. So why am I telling you this just now? Well, we're about to show the bond video again. Chart off there. We're about to, we've had a lot of people asking if they can see Reza and his explanation, beginner's guide to the bond market. So we're going to show that again now. And if you've seen it already, then no need to go away. Have a look at the video there on your YouTube. Give us a like, give us a subscribe, all that stuff. But
Nice hair, Rich. I have to say, nice hair in the video too.
very much. Monkey Man doesn't appreciate it. It is getting a bit long. I'll give him that. So yeah, there's your either or. So you got the bond interview coming up now, or you can go on and watch that 6-minute video. Please give it a like, give it a comment, what you think the earnings are going to be and what you think the correct PE ratio. Ange, what do you think?
I like it. I like it. I'm looking at those numbers, especially blue sky, because look at the the top of that is 6150. And if you look back at your chart, oh, where is your chart? Bring it up again. There we are.
With the hair.
Yeah, with the hair. Well done, zooming in. The current estimate 5852, but it was 6160. So not too far from that blue sky bit. I'm looking at the 4 rate cuts, the assumption of 4 rate cuts.
Yeah, so 21 times. That's where you think. And then what do you think your correct EPS number is? 252, 266 or higher?
I think tariffs will impact growth, so 5292.
Okay, so yeah, 5,300. So that's why a few people in the chat are saying, oh, I just feel like today may be a little bit, you've still got profit warnings to come. You've still got earnings cuts from analysts, like that horrible person in JP Morgan today cutting Vodafone. But yeah, it'll be interesting. But it's, there we go.
Also,
there's the link.
Loads of people wanting to know where your beginners options videos are. So whilst you're on that page, go to the home page. On the menu bar, you'll see on videos and also on playlists. If you go to playlists, they want to know where it's all specifically put in a series. So that's playlists, isn't it? If you click on playlists, you'll have it there. Beginner's Guide to Options, the second one.
Brilliant. Yeah. Good. Right, we're going to go to a quick break. The guys are just saying that Dylan's turned up.
Yeah. He did say he's away in the US this week. So, but Dylan's...
We've had a great chat when
surprising us.
Yeah, good stuff. Right, okay, so Reza coming up next, and then Angeline, you are back with...
I'm back with Asan to talk about gold, silver, but most of it will be on how to trade natural gas.
Excellent. I'll see you tomorrow, and we'll see you after the break.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose. Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
I mean, there's 2 main types of bonds. There's government bonds and there's corporate bonds. Essentially, what a bond is, it's a company issuing a bond to raise capital, right, for finance, expansion, investment, etc. The benefit to the company is that it doesn't have to give away its equity in the company. It's a borrowing. For investors, effectively, what they're doing is lending money to that company for a rate of return over a specified period of number of years. Government bonds, on the other side, are effectively the government doing exactly the same thing, but raising financing effectively to fund its spending. I would say that historically, over the last kind of 10 to 15 years, the corporate bond market has actually been mainly driven and accessible by institutions, and that's typically been the case because the minimum trade sizes or denominations are 100,000 plus, and so typically retail investors have kind of been excluded from the wider bond market.
Got you. Why is the bond market considered so important?
Right. So just a little bit of background. From about 2010 to 2020, government bond yields actually came down significantly, from around 4.5% down to, next to nothing effectively. Yeah. So most people didn't really focus on government bonds, and even corporate bonds had, relatively lower yields than they do now. And, since the pandemic, there's obviously been an increase in borrowing by governments. There's been inflation. Yeah. Both of these twin factors have effectively caused bond prices to fall. A higher rate of inflation effectively feeds through into central banks' decisions of interest rates. So most central banks follow kind of an inflation targeting regime. So they, the typical target in the UK was 2%. So if inflation is running at 5, 6, 7, 8%, which it was, from 2022 onwards, basically, interest rates had to rise. Now, when interest rates rise, that obviously makes the existing stock of bonds, less attractive if they've issued at low coupon rates. And so the price of the bonds has to fall in order to make those bonds attractive for investors to actually buy into. What happens is that the kind of rate that investors want to lend money to the government at is at that rate or slightly higher. There's a little bit of a spread.
So like 4.5.
Yeah, exactly. So basically, you tend to see kind of, gilt yields, and yield, it is, what that means is that is the rate of return that investors require in order to lend to the government. Where things can get a little bit choppy, and this is very important for government bond investors, is, if you get caught in long dated bonds, we call this kind of duration risk. So the longer the maturity of the bond, the higher the duration risk. What that means is that if there is a change in interest rates that's adverse to your position, it can cause wild price swings. And so that is exactly what happened to a lot of pension funds in 2022, October, when the government signaled that it was going to increase deficits, spending, and people were concerned about fiscal stability effectively and balance in the books. And so government bond yields spiked out, and the price fell quite dramatically. And those holding 30-year bonds, for example, they got hit the most because effectively, the price has to fall a lot more in order to get to that new yield, that high yield.
And in really simple terms, right, if I buy a 30-year bond that pays me 1% a year, the government 30-year yield interest rate is now 4.5%. That means every single year,
that's right,
that 3.5% has to be made up by the price today.
Exactly.
So if it's over 3 years, it doesn't really matter. But if it's over 30 years, suddenly that price is getting smashed, isn't it?
Yeah, no, exactly right. I mean, we saw 30-year bonds trading in the 30s or 40s when they'd been, trading near par. I mean, literally, that is you can see some wild, moves in prices if interest rates change dramatically. So this is what's actually happened since 2022 in most developed countries, and we're now at a kind of a level where, obviously yields are around 4.5%, and they're, and everyone's, trying to work out, are they going to go up, because normally what happens, as we will come on to, when people view that there's going to be an economic slowdown, typically a lot of institutional investors view the 10-year rates of some of the developed countries like the US, the 10-year treasuries, as a kind of a safe haven, a more liquid, risk-free kind of asset that they would go into. But I think, with everything that's going on today, there's a little bit of a concern are things still stable, risk-free? What is happening to the structure of the US economy? where is debt going? Where are budget deficits going? Are they going to be reined in? There's a lot of geopolitical issues. There's the tariff policy which is going on. So a lot of uncertainty for investors. And so,
And people are starting to talk about a sovereign debt crisis in the US. So what's actually happening there, and what started to happen with bond yields and bond prices last week?
Yeah, so if I step back just to give a bit of context about what's been happening in the US, since about 2000, the national debt in the US has grown from about 5.7 trillion to what it is now today is around 36.5, 37 trillion.
Since 2000?
Since 2000, yeah. So over a 25-year period, basically, the national debt in the US has skyrocketed. And that has been predominantly as a result of, military security and war spending, So basically there's a lot more kind of heightened scrutiny over whether the US's capital structure or its debt load, is sustainable in the long run. And that's part of the reason why people are kind of factoring, is a 10-year really risk-free, or do we need a little bit more juice in the yield in order to take the plunge and buy more of it?
What do you mean by more juice?
Well, higher yield for the higher risk. So basically, the US is perceived as more risky than it has been in the past, simply because of the higher debt load. And then obviously Trump's tariff policy recently has caused a bit of uncertainty in the markets. It was simultaneous, which the markets weren't expecting. So across all countries, the formula was used was actually quite aggressive. So that took the market by surprise. And so that's part of the reason why, yields moved out or moved higher, particularly the 10-year and the 30-year in the US.
When you've got so much debt to refinance, it's like any market, isn't it?
Yep.
You've got to make it more attractive to attract the right number of buyers.
That's exactly right. So, I mean, there comes a point where, economists and, people at the central banks can kind of feel, what the liquidity is for their auctions, what the demand is. And, right now where the US is that people can kind of see, they basically see 1 to 2 trillion per quarter of budget deficits, basically, since the Biden administration came in. The pandemic, obviously, and the spending related to that, but also, some of the other policies which were implemented, the war funding, etc. It's all kind of, shown that, effectively the spending is unsustainable. So this is part of the reason why Elon Musk has made very clear that something needs to be done in order to rein in spending, balance the books, give regaining investors' confidence, in the debt, and so that, borrowing costs can come down, because obviously, clearly, what you don't want to do is have to finance your country and your spending at very high rates of interest and never be able to credibly pay that money back. So that's the adjustment is basically what's going on right now.
So basically, if you run a 1 trillion budget deficit per quarter, does that just get added to the total pot, the total debt?
Yeah. So, well, I mean, the interesting thing is that yes, it does, right? So basically, like if you have a gap between what you're spending and what you're getting in terms of tax revenue, right? That's a loss effectively that every year that's added to your, and you're funding that through, the issuance of debt, right, and money printing, which is at the same time. So basically your national debt is increasing exactly by that budget deficit every quarter. And, if that gets to a point where investors start to think, hang on, this is not sustainable, and there's actually a risk that I might not get paid back on, what I thought was a risk-free asset. And suddenly they're thinking, okay, well, 4% isn't that attractive anymore. I need 4.5%. But it can also get into a runaway perspective where, it can get, a lot higher. The US is going through a structural adjustment. It's trying to, get its debt down to sensible levels. It's trying to find ways in order to reduce the debt. The effect of tariffs, isn't just on the countries where you're implementing the tariff on their goods. It's also for US corporates. So if I give you an example, Nike, for example, buys a lot of its shoes from China. Let's say it costs $10 a shoe, right? They then sell it up, mark it up, sell it $100. if there is a 100% tariff on that shoe that costs them $10, that's been made in China, they have to make a decision because they're paying that $10 to the US government when they import. They have to decide, are we going to push up prices, to compensate for that extra cost risk, or we're going to take the hit? And in reality, what's going to happen in a slowing market is that it is actually probably, in my view, it's going to be the corporates which take the hit. So what you're going to see is all the sectors which rely on China for cheap, components. The corporates will have to make a decision as to how much their profit they're going to have to sacrifice. So the recent move by Trump to exempt the electronic semiconductors, computers, smartphones, those are important strategic sectors for the US economy because robotics and AI are obviously the future. That's where the competition between China and the US is going to be.
So you mentioned at the start you got sovereign bonds and you got corporate bonds. Obviously, there's a difference in the issuer, but how is the market different? How does the corporate bond market trade?
Yeah, so the corporate bond market is got a lot of diversity in it, right? So with government bonds, you're kind of focused on interest rates, and you're focused on duration risk. That's pretty much macro.
And which government it is.
Yeah, and which government it is. And for corporate bonds, you also have to take into account credit risk of the company. So corporate bonds tend to offer higher coupons, higher returns to attract investors into lending to them effectively and buying their bonds.
Okay.
And obviously a company can go bust, which is a lot harder, for governments to go bust because they can obviously print money, they can increase taxation, so they have much more flexibility. People have a lot more faith in governments generally. Generally there's a lot more risk in corporate bonds, so you need a higher rate of return to do that. Now, this period of time, what's actually happened is, similar to government bonds, investment grade bonds, which is the lowest risk type of corporate bonds. So they're the high credit, highly rated, from a credit rating perspective, bonds. So investment grade corporate bonds tend to behave, more closer towards, how government bonds behave, when interest rates changes in the economy.
Yeah.
The high yield bond market, which is actually the most interesting part, which is where you can generate returns in the UK, at least currently, of between 8 and 12%.
To 12%.
Up to 12%, yeah. So a lot of bonds, high yield bonds, which tend to be kind of shorter to medium duration. So there's a lot issued at 5-year, some at 7 and then 10-year, but generally a lot shorter maturity or duration than investment grade or government bonds are issued at. But one of our most popular bonds on our market is the Ocado 10.5% bonds that were issued last year. Over the last year, that stock has dropped 21.3%, over 12 months. There's no dividends paid out by Ocado, but the bond has pretty much traded up or higher than par. This is the classic example. So you've got the stock, which has lost 21%, but the bonds have made you 10.5%. In the UK, it's interesting. If you actually go back through history, so over the last 25 years, if you actually look at the returns, the FTSE All Shares generated 5.7% a year per annum. According to Barclays, on the investment grade side, it's 4.5% over the last 25 years.
Right.
Same period of time. High yield has generated 9% per annum. So it really is the secret asset class which generates consistent compounded returns over time.
Excellent. Hopefully you'll come back at some point.
Looking forward to it, Rich.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them.
You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hey, welcome to Trading Experiences with Asan and myself. Hey, Ash.
How you doing, Ange?
I'm very good indeed. Good to be back.
It is indeed. It was a long 2 weeks.
I know. Lots of people said, "How did you time it, Ange? How did you make it so that the markets all went nuts the moment you left, and then when you came back, it's like."
Do you think there's a correlation there?
Oh.
Could be.
I did not plan it. If only the short Ange trade. I'm actually quite small. Speaking of which, I'm so glad we're back and doing the series, because we are going to talk about natural gas.
Yes, we are. As in, just to kind of recap, we spoke about gold quite a lot, and since then, gold's been on an interesting run.
Yeah.
As fear in the market's been going up and down over the last couple of weeks. But before we move on to natural gas, I wanted to talk to you about silver real quick.
Yeah.
Because we've spoken about gold, but what about silver? As in, is that considered a safe haven asset as well, but to what extent compared to gold?
Well, it's slightly different, and I'm glad you asked about that, because let me just backtrack a bit, because gold is very interesting at the moment. Let's have the chart for gold, which I'm adding to my workspace right now, and you can see there on Monday, the previous session, I was looking at key resistance at 3,512, and I said that if we don't break this key resistance, then we're going to bounce back towards that trend line. Can you see the white line there? Yep. Now, this is a trend line, just to be clear. This is not a technical analysis line, which has to really, if you look at where I drew it, has to respect all the wicks. You should not cut across any of the lines. However, this is just to show you that the trend is still your friend. It's still going up. And we are now seeing that this is coming back down. Potentially maybe 3,200, that level is the first port of call. It is, of course, higher than the high seen on the 3rd of April. So for a technical point of view, this is very interesting because, as you rightly said, with turmoil in the markets, gold is seen as a safe haven, right? So we've had a lot of movement into this space. In fact, just before I left, I think we caught up and I said it's breaking all fundamental and technical rules.
Yeah, we took our trade that we placed off, but not gonna lie, shortly after that I went long on gold for a bit. Yeah, and then look what the market's moved.
Yeah, and I think maybe even a slight retracement here, then we could potentially be on our way back up again, because you don't fight the trend, right?
Absolutely.
Unless something huge happens. So back to silver. Let's have a look at silver. Trader friends, any of you trading silver? I know there are quite a few of you out there because you message me on the show about silver. It is slightly different. For a start, as you can see on the chart here, this is the daily chart. What is the first thing you can tell me just looking at this chart, Asan? It is way more volatile
Than gold.
Yeah. And if you are a volatility trader, you will like this because it gives you a lot of entry and exit points. And also you can see that quite recently it is quite interesting in terms of its volume as well. Silver tends to be a store of value just like gold, and it's seen as a hedge against inflation and currency devaluation. But the thing with silver as well is that it has the ability, people who trade gold tend to not like trading silver because it can surprise you. It can suddenly go against, the trend. So what it does mean though is greater short-term profit if you're a vol trader, right? Potentially more short-term profit. What else do we like about silver? If you look at the chart here, it has progressively headed higher since September 2022. We always talk about the power of 3 or looking at different time frames. So let's take a look at the monthly. So tell us what you can see there. Awesome.
Similar situation on a longer time frame?
It is, similar situation because we're seeing sort of from March, it is moving upwards. And then if we go down to the weekly view, it is also in that upward trend, right?
Yep.
And that corresponds with the daily.
Now,
except for that move.
This similar to gold. Do you reckon industrial, because silver has a lot more industrial uses than gold does, right? Especially in like the renewable energy sector.
Yeah,
things
and medical
like
devices, batteries. Yeah.
Arguably, that slowed down a bit over the last 18 months, as in now, given the geopolitical environment, as compared to what it was, let's say, mid 2022, early 2023. So do you reckon that kind of feeds into the volatility space a bit within silver, to its industrial demand not being uncertain over the last, let's say, 12 months or so?
Yeah, it certainly has, especially with the tariff tantrum taking place. It's one to watch. I know of silver traders who have many legs in. So from experience, what I've seen so far, trader friends, is you might see someone with a very large, relatively large gold position. But quite often when you meet someone who trades silver, they're very, very small positions. Some even have 30 open positions and different time frames. So that gives you an idea of the kind of volatility we're seeing. But certainly the tariff tantrum, the talk about how it's now back to petroleum, not beyond petroleum. So no surprises for what that means for demand for things like photovoltaics, and also things like, batteries. Silver is a key component in those sectors. And if demand falls off or there's any issue or risk of a trading off of demand, it tends to hit the silver market. If you're talking about the options market, now this is slightly different. So I'm going to move the view now to the options side of things. And if you look at the top, you can click Commodities on the top right-hand side. Let me know if I'm going a bit too fast for you.
No.
Thank you. I love it when the gallery as well as Ash goes, no, there's a lot of confirmation here. It's good. Trader friends, let me know if this is going a bit too fast. You'll see that we have crude, natural gas, gold, and silver. So this is how we try and get, we talk a lot about this with ISAR as well, and about how we give positive skew and try and get traders to be aware of where you can give yourself positive skew. So if you go to silver, you can go to the weekly expiry 25th of April, which is not too far off, but you can also go to the May, look out a bit further, and you can see just by measuring the two that, we're seeing this 40 mark there, and, it's tipping up slightly. So you can see that, in terms of the options market, we are looking perhaps potentially and more to the upside skew. Andrew McKilvey asked whether, Ange, can we use this to dictate which or to decide which direction? And my answer was like, no, because we'd all be sitting in the Bahamas,
exactly,
drinking mojitos with cigars. But no, unfortunately we can't. But what this can tell you is when you're about to put on your thesis and you like high vol, then you're going to try and go in when it's high volatility. If you're someone that likes trading in calmer markets, try and go in when it's a bit calmer. The other thing I would also say is that if you're new to this, pay attention to volatility, because that matters, because you don't want to get hit when, for example, Trump has said something and markets are all over the place, right? You want your thesis to be able to stand up without extra, what we call noise.
Absolutely.
Does that make sense?
No, that does. Thank you for that. I don't have a lot of experience trading silver, so that was why I asked, and how we've been talking about gold, and I have some experience there. But I could never kind of put my leg in trading silver. That's just one market I never kind of delved into. Unlike natural gas, which...
I love how you're saying natural gas, because normally what happens is if a gold trader meets a silver trader, they go, ooh, volatility. But if a silver trader meets a natural gas trader, it's like, ooh, even more volatility.
So...
You must like risk, Ash.
No, but the thing is, so you know how you play poker, right? And then you kind of, you have 5-6 in your hand, and it's post flop, and you're trying to hit a gut shot straight. That's how I traded natural gas. It was a very toxic relationship. I just gave and got nothing in return. But it wasn't the other person, in this case natural gas, it was more me. Because I think two of the biggest lessons I learned was trading natural gas as well. You do want to do your market research before you actually start investing in a particular space, whether commodity or any investment product. And B, always have a plan and have your bearings right, just so you can see the plan follow through. So when I started trading natural gas, again, this was, I mentioned in the first episode, my trading journey kind of began during, like, just after COVID, the Ukrainian war, that crisis. And if you remember, April 2022, natural gas prices went through the roof. I think average it was 6.68 USD compared to where is it now? It's around, hovering around mid three, between 3 and 4. And I kind of got into the game a bit late, as in the highs had hit and markets were extremely volatile, and I got burned by natural gas quite a fair bit during that time, because I kind of got exposed to that market only after the highs had hit. And I did not research the market well enough. I did not have a plan. It was more trying to chase highs and bounce off lows. It was very...
Ash's way of saying he used his gut.
There was a lot of gut, and initially, you know when you go to the gym and you have newbie gains, right? Initially, everything was green, everything was hunky dory. I'm like, yes, you're doing the right thing, even if you're winging it. But
Did you say you go to the gym?
If you go to the gym, right, and if you go to the gym, and if you're new to it, you have newbie gains, as in you gain a lot more muscle quicker, as compared to someone who's experienced. So I started hitting newbie gains when I started trading natural gas, but very quickly everything started going in the red. Whether I was long or whether I was short on the CFDs on natural gas, I just couldn't find my bearings, and it was because A, I did not understand the market well enough for that particular commodity. B, I didn't have a plan. I was just trying to chase. It's like similar example I was giving before. I was trying to chase a flush or go for a gut shot straight, and natural gas is like you say, it's notoriously volatile, right? And why so? The weather has so much to play with the supply and the transportation of natural gas, right? And how often do we get weather predictions right? We can to a certain extent, but things like, is it called the Gulf of America now, or Gulf of Mexico?
Oh yes, the Gulf of America.
Gulf of America, like
even if you're on a flight, they tell you that we're flying close to, and then they say it now apparently known as Gulf of America.
Yeah, hurricanes there then tend to impact your supply and ability to kind of withdraw your...
That's right.
Withdraw gas from your deposits, right? So all of that makes the market space a lot more volatile. So there's weather dependency, there's storage limitations, because natural gas needs to be stored like underground, and LNG in cryogenic tanks, right? So it's a bit more complex to store natural gas as compared to like pellets of like metals that you would store in warehouses. So there's that. There's supply side factors. Obviously, Russia's a big supplier of natural gas, especially to Europe. And during that time, because the sanctions were coming out and there was just geopolitical tension all around, as in, you and me need heating, right? We all need heating. And demand side elasticity on things like natural gas are quite low. When the price goes up or down, the demand's not going to go down by as much, simply because we need it. So all of that kind of plays into the volatility that you have for natural gas. I know this now, after making all the mistakes, after seeing everything go red, where I had to take a step back, stop trading that commodity, and then delve into, all right, how does the market work? What are the complexities that you have within the market? And having a plan, which is one thing that's been my biggest takeaway. Have a plan.
Yeah. Now, this is the key question. I was going to ask you this. Did you write down before the trade, enter at number, exit at number, change of mind if, and plot this down in your chart prior to your trade?
For all of the commodities, yes. Natural gas, shockingly.
Yeah. Why? It's so volatile.
Because that's it. But I didn't know at the time, right? I learned about the space after making the mistakes because it was a fad at that time. Natural gas prices were ridiculously volatile, and the overall trend was positive. But that's my experience of trading natural gas. Let's bring it back to now, right? As in, how is natural gas performing nowadays? We bring the chart up, and how do the prices for, let's say, the U.S. natural gas futures, how are they performing nowadays compared to, let's say, where it was at all-time highs in mid 2022?
Now, here's the thing with natural gas. I mean, if you talked about 2022, and yes, there was a huge, move upwards there. There was also a lot of noise. Russia invaded Ukraine. I think it was February, right?
That's right.
Right, February of that year. I remember this well because lots of people called me up to say, "What do we do now? Are our children going to get, enlisted into the army?"
Yeah,
it was
an interesting time.
Yeah, although I wasn't shocked because the day before I was sitting on a high stool looking at loads and loads of maps with quite a lot of map geeky friends who are also strategists, and trying to find images of the treads on the tanks that were amassing, and they were winter treads. So it was very clear that they had that small window to invade because they had the right tracks. And as we know, if you lose that window, then game over, because help can come in easier when there's no snow on the ground. Anyway, cut a long story short, there was a huge spike there, you're right, and that has since eased. And we always say to look towards from left to right. Have you heard about this left to right? To see, of course, the most important bit of the chart is the right-hand side because that's where the most recent price action is. So we saw that, natural gas had this long stretch upward trend from August 2024 all the way up to the high reached beginning of March 2025. But since then, it has been weakening. And don't forget, you need to also strip out, seasonality here, because when it's not winter, it tends to, come back down again. But, it has come from a very, very long uptrend, right? So now progressing down. I have put the parabolic saw. Trader friends, any of you, this is specifically for natural gas, but it duplicates it across all of my charts, if not all of them. So if you know how to just let me know, because I'd like to know, just put it on one chart, not across the board. But this is just to filter out noise, right? So have you used the parabolic saw before? So it's just a handy tool. I wouldn't say trade it on its own because it's just like a heads-up tool, and it's also called the stop and reverse. It's a technical analysis indicator, just very simply making it very simple for everyone. The dots indicate the direction of the trend. So if the dots are below, you see the nice green ones, and the price is above that, then we're in an uptrend. If it's above and it's red not being good in this case, and the price is below, then it is in a downtrend. So can you see it's still respecting that, trend, right? We're not seeing any breaking out above that. It's still respecting that pretty much, except for those two blips there. But on the daily chart, it is still respecting that. So I go out to the weekly. Have a look there. as well. And I tend to put up the volume as well, because that's just very helpful.
Yep.
Somehow the volume has come off. There we are. And, you know, volume, we've talked a lot about this. Now, volume matters a great deal. And in fact, I tend to leave it up on almost every instrument. Just because when you have a rise in volume, it's a pay attention, something's happening. If you see high volume when there's a breakout, that is conviction. If you see a breakout and there's not very high volume, it means this could be a false.
No, I've started doing that as well. More recently, over the last six to 8 months, having my volume indicator just below whatever technical analysis or indicator I have on the chart as well. It's really helpful. Like you say, it needs to move in a direction, but with conviction for it to establish a trend.
Yeah. And for natural gas, I would say that, you know, you have to pay attention to fundamentals as well, because clearly the chart can't tell you everything. The chart can't tell you, for example, if Trump's going to do something later today. It can't tell you if, you know, whether the weather patterns are changing. And so you can take a position on natural gas or UK natural gas. You can also use ETFs, for example, that you can find on our platform. Monkey Man is asking whether you can trade natural gas in an ISA. I don't know, actually.
That's a good question.
Yeah, it's a good question, but I will find out for you. We tend to hear a lot of people talk about, you know, right now it's holding at a, let's show you the monthly chart. Right now it's holding near 1, 2, 3, 4, 5, around the 5-month low. Yeah?
That's right. I think it's the lowest since the start of the year.
Yeah. What we're also seeing is that we are having mild weather forecasts. Yay, El Nino! Climate change. And what this means is it will reduce, of course, both heating and, you know, cooling demand as well. People tend to forget that you also need natural gas if you're kind of...
Run your ACs and whatnot, yeah?
Yeah.
100%.
I mean, across Michigan and many parts of the US that get super hot, my skin was so hot, it was starting to, you know, get very, very itchy, like burn territory. This is, no one knew in the US because all of them had their AC on. All of them had their AC on. The other thing is you hear about pipelines. People who trade natural gas talk about pipelines. So make sure you understand maintenance. And when pipelines go down, then this means that gas output will be hit. So that, of course, changes the supply and demand picture. Then you talk about, you often hear people talk about LNG as well and the feed gas levels, right? So this also feeds into the supply and demand picture. And last but not least, before producer Phil comes in with his crook, I'm going to walking stick as well. He's actually a very young fellow. I'm going to show you the last piece, but if not the most important piece of the puzzle, weather.
Weather, yes.
Weather is very important when you trade natural gas. And some people go, which weather websites, you know, which websites are handy? There's one that's called natgasweather.com, you know, that gives daily reports. It gives you some here, but obviously if you pay, you get more granularity, but it does give you a list at the bottom here of what your subscription includes, and it gives you a daily weather forecast, summer outlooks, which is important because remember what we talked about?
Yep.
And winter outlooks as well, because if we have a very mild winter, no surprises for what that will do to natural gas, and they've got lots of handy charts. There's another one called Hyper Accurate. I don't know whether it's hyper accurate, you have to pay for this one, but it's called Climavision. So pay attention to weather when it comes to natural gas, because that really does make a difference. And as we know, you know, when weather changes, it can change on the sixpence. Those of you that sail, and if you know what to look out for, then it gives you a better handle on trading something like natural gas.
No, thank you for that. As in these last ones, I found the websites are way too late in the process.
Oh, well, Climavision and Nat Gas Weather. There you go.
Nat Gas Weather, yeah. That's a good one.
All right, any questions? And of course, hit the subscribe button. We will be clipping these videos up with Ash and putting them on the site soon. So do make sure that you keep us enlightened with whatever you want us to talk about in the next session, because we are going to cover that for you. Ash, have you subscribed to the channel?
Yes, I
A
have.
new one.
I did that before you had me on.
But there's a new one. We've gone to the news site now.
Yes, that as well, yeah.
Amazing stuff. Well done. We're going to have an applause for Ash there. Right, thank you very much, and we will see you tomorrow. Happy trading. Make sure whatever you're trading, you have positive skew, and make sure you have your risk management in place.
Tesla earnings are out, and they're as bad, worse than expected. It is Tuesday, April 22nd, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. So we take you through the rest of this trading day. Futures market closes at 5 Eastern, 4 Central. If you're on the platform on the website, tastylive.com, thanks for joining us. Come over to YouTube. Tell us what you're trading, what you think of this market action. We can head right over to the charts here as we start the show off, as we get an insight into Tesla's earnings here. Currently trading right around where it closed, $238 and change or so. EPS estimate was 42 cents, comes in at 27 cents. That's a miss of 36%. Revenues were estimated at 21.4 billion, coming in at 19.335 billion. That's a miss of 10%. EPS is down 40% year over year. The revenues are down 9% year over year. The EPS is down 63% quarter over quarter, and the revenues are down 25% quarter over quarter. And yet, Dylan, the stock is trading where it was about 3:30 Eastern today. Is this just a case of finding out yesterday's news? We knew Tesla was going to have a bad set of earnings in Q1. Is this worse than you expected?
I don't think that my expectations matter. I think that you hit the nail on the head, which is that you kind of couldn't have a more disappointing or abysmal financial performance from a publicly traded organization, at least if you measure by the speed of the acceleration or decline in sales and earnings and every relevant financial metric. It's an unusual and extreme disappointment or decline in all the relevant numbers. But it sort of, if anything, it proves the market as a discounting mechanism. Because the stock, imagine if the stock was at its peaks and a financial report like this came out, it would be a mess. But I think that it's yesterday's news.
Yesterday's news, perhaps looking through their financial summary here, automotive revenues are down 20% year over year, gross profits down 15% year over year. Income from operations is down 66% year over year. Adjusted EBITDA is down 17% year over year. Non-GAAP income minus 39% year over year.
And where's the stock right now? Is that up 4%?
Yeah, it's still holding on to its gains from today. We close in at 237.97 today. We're currently in at 239. But Ellie, I mean, this is a game of expectations. We've seen we were talking in the green room here. Who on earth was expecting Tesla to have a good quarter?
Nobody. I mean, the price action here is really, I think, indicative. We were just talking both in the green room and on last call, and my thoughts were that nobody cares about this report, and it's because of the expectations. They were there at 41 cents a share, which obviously we've shockingly missed, but 41 cents a share would have been a 44% almost decline relative to the 73 cents a share we got in the previous report. That was the forecast. So we were looking already for a blistering downshift in Tesla earnings as consensus. And obviously 27 cents a share is worse than 41.
Can I just provide some additional color here as some comments are coming out as I'm finding them? They note that they are leaving out a return to growth forecast from their earnings report. They're going to revisit their 2025 guidance in their Q2 update. They say that it's difficult to measure impact of global trade policy on their company's earnings, and the uncertainty could impact demand for Teslas in the near term. So you're seeing, in some sort of guidance here. It's interesting, Dylan, how Tesla's going to thread the needle on this commentary, though, right? Because anything that Tesla says is effectively an extension of Musk saying it.
Well, yeah, I think another reason.
Well, I mean, go ahead, Dylan.
I was just saying, if you ever wanted to know the value of Elon Musk, it's obvious that Tesla's stock price at this moment in history is not trading based on financial performance of the underlying business.
Moreover, we know that Elon Musk has been yelling
broader...
at people like Peter Navarro about the trade war and saying it's a bananas way of proceeding from his perspective. And we see in these results his company very clearly suffering from exactly the kind of tariff policy uncertainty that shows up in the PMIs that everybody else is worried about.
And why won't the other car companies, by the way, see big declines in their performance as a result of a massive implied increase in their either supply chain operations and or their retail distribution price points? Full stop for every car company.
If Tesla's going to complain about supply chain issues and impact of tariffs, then every other company is going to have it worse, if only because Tesla has done a good job.
And to what degree is this quarter of Tesla's financial performance a reflection of political sentiment? And to what degree is it a function of foreshadowing of precipitous declines in demand, full stop, especially for large expenditures like cars?
Well, Tesla's done a good job standing up supply chains in local markets. So if there's a global disruption, it's not too terrible for their bottom line compared to other manufacturers. But nonetheless,
I think they're the best.
They might be the best, which is so ironic that as the Trump administration tries to press forward with, reorienting American domestic manufacturing policy, this is like the single area that Musk has expertise in, and that he's probably done better than anyone else in America in the modern era.
And organizing resources to do any big idea, he's the best in the history of the world.
And yet, he's completely sidelined in this entire conversation. He's talking more about impeaching judges, right, than he is talking about manufacturing, which is like the guy's done it better than anyone else in the modern era in terms of that. But
100%.
Okay, it's
But you're trying to use logic against an illogical structure, which you already know this.
Well, it's like he throws a 100-mile-per-hour fastball, so we have him, sitting on the bench. It's like, no, get him out there, put him on the mound. This is what he knows.
But you're assuming that there's some you're assuming you're not dealing with an impulsive and fickle, non-logical system, which is American politics.
That is true. So listen, the commentary here from Tesla isn't surprising. I think if there's anything surprising here, it's just things are really, really bad right now for the company. We do have an earnings report, call that's going to be coming up shortly as well. Musk will be speaking on it. That's something to chew on. Ultimately, stocks here, which were bouncing up into the end of the session, do get a little bit of a pullback. The NASDAQ here by 2.46%. And what a maddening day it was. Stocks ultimately higher by 2.5% or so across the board. On the back of a rumor this morning, CNBC reports around 11:55 Eastern Time that Treasury Secretary Bessent gives remarks at a private event, JP Morgan private event. No media, no public. But he gives these remarks at a private event suggesting that there's going to be de-escalation soon. CNBC's own Eamon Javers provided more clarity later today around 1:23 Eastern about the comments that Scott Bessent made. And this is a rough transcript in his words. Quote, the next steps with China are, no one thinks the current status quo is sustainable at 145 and 125%. So I would posit that over the very near future, there will be a de-escalation. And I think that should go, given the world, the market's a sigh of relief. We have an embargo now on both sides, right? Dylan, this doesn't sound like there's a de-escalation happening. It doesn't sound like negotiations are occurring. It sounds like this is another one of the...
No, but again, you're dealing with a market, as I've talked about a bunch, and I'm not the only one. I mean, it doesn't matter for me. It's a mathematically observable that the market does not believe that what is being discussed in public is likely to be what is implemented in reality, particularly when it comes to numbers like those with China. And what you're getting from sort of this back talk from the Treasury Secretary is an acknowledgement of something that the market is deemed to be obvious.
Ilya, you seem to be a little bit more skeptical about today. Liquidity comes back into the market. We get a rally. We get some news to chew on here. It sounded like today you were using the opportunity to potentially carve out a little bit of a short delta position in stocks.
Indeed, that's exactly what I did, because what this looks to me like is exactly the thing we talked about yesterday. So we said, oh, stock markets are back to selling again, but liquidity is really thin, and we're still going to have the reopening of markets around Europe, around some of the big parts of Asia, obviously sans Japan, which opened on schedule on Monday. I suppose you could say China is a solid-sized market now. That was open, but Hong Kong was closed, Australia was closed, all of Europe pretty much was closed, wherever there's a decent pocket of liquidity. So there was going to be something that was going to happen tactically as that liquidity came back and kind of found that the U.S. had driven things to lower lows relative to last week's close when we came online. There was likely to be some kind of a tactical reshuffling around that, some sort of bottom fishing likely. And so we get a nice little bit of news to go with that. And the bit of news is as flimsy as the 90-day pause on the reciprocal tariffs over 10%. And the rally is shallower. We said when that pause came, well, if the reason the tariffs are spooking people is uncertainty, not the sort of conceptual architecture that there will be tariffs, but that there is uncertainty about the rollout and that it's chaotic and difficult to predict, and that's hitting business confidence and consumer confidence and having a cyclical impact. And that's the reason for stocks to be concerned and for markets in general to be concerned. The reciprocal tariff news was window dressing at best. Oh, goody. Tariffs only went up 5 times from an average of 2% to an average of 10%. They didn't go up more. Oh, and by the way, now we have a new deadline that's 90 days away. Don't anybody go make any kind of business plans, because in 90 days the whole thing might change. There's a new season finale on the books. You got to watch it. Don't do anything. That's more uncertainty. So it was, as we said then, pretty obvious that if the uncertainty is the problem, the reprieve is meaningless. And if the reprieve is meaningless, the rally that it ostensibly sparked is to be sold, which is precisely what I was doing. And to me, this is exactly the same thing. Liquidity returned. It gave us a little lift. The news is ultimately fixing of nothing. And look at the NASDAQ. The backfill, I think, on NQ futures is probably the most telling. And Brent oil is another good example. So is crude, but WTI crude. But take a look at a 4-hour chart of this and of NASDAQ, and what you see is a break of the preceding range, a bounce to test its underside, and a hold right there. So to me, this was a nice opportunity to sell at higher levels than we closed yesterday. Obviously, I'm using verticals and keeping it risk controlled because these are very jumpy markets and ultimately who knows. But this looks to me like the spot this week where maybe you had a chance to take a bite of the bearish apple if you didn't get in on the aggression that was yesterday, and maybe now we head lower from here.
The news flow today to me was so funny because we hear that Besson says that the situation's untenable, and there was separate reporting that said Besson acknowledged that negotiations with China had not begun yet, and then about an hour later, during her press conference, the White House press secretary said that negotiations with China had begun in that interim window. Just very difficult to believe. And the market ultimately sold off around those comments from the press secretary because do we really think?
But isn't the biggest nugget of information that whatever exists, whatever is the existing rhetorical agreement of this moment, will not be. It's not that Besant is right. It's that whatever exists now is not what's going to be. And the big debate is how much of an economic slowdown is there going to be as a result of all of this? And how soon is it going to be? How deep is it going to be? How severe is it going to be? And how much circumvention of it will there be?
Exactly.
Well, I mean, whatever it is.
Again, this is not about the concept of tariffs.
But what's on the news from the president is not what's going to be.
Or at the very least, you cannot take it at face value, even for a 48-hour window.
I'm happy
if we are all Pavlovian dogs, this is what we have been taught.
And what did exist will never exist, but will exist is still a subject of great debate. Which is why
the one thing we know will exist is some sort of economic downturn.
100%.
Because if you look at the break evens in the bond market, you look at what Fed funds futures are telling you, they're gearing up for recession.
Exactly.
So trade deal, no trade deal, yeah, whatever. Okay.
I think the charts say enough. I mean, we're funneling in both ES and NQ into triangles right now.
Yeah.
No matter how you slice it, right? Which are springs that are coiling and suggesting that a bigger move directionally is coming. It is top left to bottom right. So continuation wise, one would surmise that this is going to be another attempt at the downside, perhaps in the short term, at least just on a pure technician's basis. There is one thing that stands out today, however, amongst all the noise. You do have stocks bouncing. You do have bonds bouncing back, particularly at the long end of the curve. Gold prices put in quite the nasty session. GLD looks a little bit worse than gold futures. Gold, you can see GLD here is looking a little bit more like a top. And for the first time in GLD, you get a close below the 1 week moving average.
And a vicious evening start.
Let's just go back here. That's that 1 day moving average, excuse me. So this is the first, you have this daily key reversal here on the 12 hours, the evening star candlestick cluster. But something happened today in gold. I myself, as talked about at Futures Power Hour, I got out of my long position. No longer long gold. And I likewise flipped short. Flip short today as well. Why is this the case? Something triggered today at the highs where gold prices were more than 25% above their 200-day moving average. That is a unique occurrence. It hasn't happened all that often. Happened 12 times before. When we think about the propensity of what gold does over the next week, next month, the returns are negative most of the time. At least a week later, it's about 70% of the time. A month out, it's around 56%. And losses in the neighborhood of 2% or so. This has been a tremendous run. But if we have an unwind and unclenching in these markets, gold has been the primary beneficiary. And I would think then, if we're going to a risk-on mode with hope and deals potentially coming, despite whatever rumors there are, the asset allocation shift becomes pro-silver, pro-Bitcoin, and less pro-gold moving forward, as there's a little bit of a catch-up window. But again, the historical nature of the rally just brought us to a place where gold has typically seen exhaustion. If history is any sort of guide, and who knows if it is. But I decided to flip from long today to short once we started to see that we got into that rarefied atmosphere. that the last time we did on an intraday basis was in 2020, March 2020. And then before then was August 2011. And those were relative, peaks for
huge turning
gold
points.
prices. Huge turning points for gold market and turning points in which silver superseded gold.
Yeah.
So I have made my adjustments right now in the safe haven aspect. And then Bitcoin up 4.5% today, back above 92,000. So even yesterday when it was seen as a safe haven with gold up and the dollar down, Bitcoin in a risk on market is now getting a bigger kick. There's a lot of asymmetry, it feels like here, Dylan. Almost as bad as yesterday, gold and Bitcoin up while the dollar is down.
I know you hate it. You hate it. I mean, it's just one of the worst. I try to go into denial. Like when I hear about the strength of Bitcoin and gold and then the relative weakness, I mean, the dollar today could have been worse. I mean, it's been just the overall trend of whatever, since April 1st or whenever it is. To have dollar down, rates up in the face of a slowdown in a risk-off marketplace is troublesome.
Very.
I'm trying not to be hyperbolic, Ilya. I'm trying not to cause concern in the streets. I'm just saying it's troublesome and unusual.
I mean,
and unprecedented. And
I was writing
concerning.
about this today.
I don't know how you get a
know about the dollar
in a risk-off market, and then I get a dollar down, and I got a rates up, and I got Bitcoin up, and I got gold up. I gotta say, these are not good signals.
So Chris and I like to nerd out on the dollar smile model, which is something that was developed.
I learned it from you.
By the economist Stephen Jen, who basically put out the idea and showed the data backing for it, saying that the dollar tends to do well in times when the U.S. economy either vastly outperforms or vastly underperforms G7 peers. That essentially the dollar's performance is like a parabola relative to its growth performance, and hence the smile. And what this captures really is that if the world's largest economy is vastly underperforming, then there's probably risk aversion and a global recession and blah, blah, blah. And it tells you the dollar is a haven asset in times of extreme stress like that. It also tells you that if the U.S. economy is outperforming, well, then the classic currency market dynamics apply. Strong growth, higher inflation, central bank raises rates. Something with higher rates is more attractive as a yield instrument. People buy it. So the dollar either rises for classic currency reasons, higher yields, or it rises because risk aversion, because it's a haven of liquidity. Okay, what are we seeing here now since the beginning of April? We're seeing higher rates. It's not doing anything for the dollar. We're seeing risk aversion. It's not doing anything for the dollar. The architecture of everything that's defined the way the dollar works, basically since the 1970s, when Nixon abandoned the gold standard, isn't working. That's how far back this data goes. I've been able to reconstruct the dollar smile myself from scratch, going back to as far back as 1975. So
he's not smart. What do you call this shape? Where it's like goopy faced, where one side
this regime change.
What is it? It's the scream face?
Regime change. This is regime change. This is structural regime change, and it's not good. I don't think it means.
I thought you'd switched from smiley face to scream face.
The line has just left the chart.
But it can't leave the chart because it's still the reserve currency.
That's the whole thing.
Despite Bitcoin, despite gold, despite the
it's still the currency of commerce, and there's
no place else. You're in a prison of your own creation. If you're China,
there's no changing that.
If you're Europe, if you're London, if you're Rio, if you're Shanghai, if you're Beijing, if you're Tokyo, everybody's long the dollar. It's the only currency in the world that everybody has. Even the Russians by proxy in Dubai and Istanbul and all in Bangkok and all that.
Well, the liquidity is so great, there's no way around it because there's just no alternative. We'll see what the Europeans manage to cultivate now that they're happy to have fiscal mutualization, at least on defense. We'll see if this is like a gateway drug to a fiscal union. But what we are going to get probably for the next several years, because you're absolutely right, there is no alternative, is just a structurally weaker dollar. So any rallies are sold.
Awful. And no one knows the levels. It's going to be
great news for U.S. consumers who are going to lose purchasing power of imports and experience inflation.
But by the way,
of the practical kind,
raising the price of all imports could easily be a conscious decision of this White House.
Yes,
obviously, it is a matter of policy, not just by way of tariff, but by way of a weaker dollar.
This could be the adoption of a weak dollar policy to rebalance.
How could it not be?
Trade. Whether it's a wise decision is a separate question.
That's part of Stephen Mirren's Mar-a-Lago talk. They've deliberately, the advisors close to President Trump have deliberately outlined a policy where they'd like to have a weaker currency. That's when part and parcel to the Mar-a-Lago Accord talk that you hear in some of the macro circles where people are in earnest trying to find some sort of policy framework to have this all make sense, to learn how to invest around it. The dollar today has a bounce back against the yen and the euro here, but it's not exactly the most convincing thing. We're still below our 1 week average. The dollar is much weaker than interest rate differentials would suggest they'd be. It's obviously breaking free Bitcoin.
The most interesting, because the dollar bounces against the Aussie probably more convincingly than against a lot of the other names, and it's on a risk-on day.
Well, and particularly where
so it just tells you
topping out.
You're through the looking glass here. This is a completely different kind of dollar.
It's your dashboard to global activity. Full stop. Because really, anyway, we have to go through all why, I guess what's interesting to me, Ilya, because I could do this with you guys probably forever. It's like the most fascinating financial event of our lifetime at this point, right?
Yeah.
Yes.
Why are you so? And I don't want to assign sentiment to you that I don't know is there. Why are you still willing to get short? Why do you believe the market doesn't reflect the magnitude of the coming slowdown? How about that? If that's a fair presupposition in my question, I don't know.
So I am willing to get short because I think what the market is still not reflecting, for lack of evidence, is the actual economic hit of what is probably coming. Because first you get the economic hit, then you get the follow-on, which was always gathering, which is the credit element. This year marks the refinancing of everybody's 5-year COVID money. And that's a huge pile. Obviously, I've been talking since last year about this idea that this tightening cycle was unique in that in every other tightening cycle since the dollar got untethered from gold in the early 70s and the current financial system was born, saw companies pay more for interest when the Fed hikes. Of course, that's the point. This time, that didn't happen. They actually paid less. And it's because during COVID, they absolutely gorged on free money and just put it in the mattress and sat. Because there was nothing to spend. There was just very cheap money, but lockdowns and supply chain disruptions and all manner of reasons not to spend it. And so their cushion was very, very, very deep. But that money comes for rollover this year and next year at interest rates that are maybe, by the time they get around to it, 3 times higher, not 5 times higher, like they could be at the peak. And so on top of the loss of economic momentum, because people are afraid and there's uncertainty, which is what the PMIs are telling us, the consumer confidence numbers are telling us, that people are essentially holding back spending and saying, we don't know where the dust is going to settle, let's wait. And so things have hit a wall. Beyond that, there is then the actual damage to economic activity once the hitting of the wall commences. So things have stopped, but then the economic hit, that's still coming. And the pain, once it starts to reverberate through credit markets and amplify what was already going to be a stressful period, all of that means even more weakness. And the resolution is probably more Fed rate cuts once it shows up in the hard data, or at least once the PMIs tomorrow are sufficiently a trend-making event that Fed officials can start sounding dovish in comments going into the May meeting, whereupon they may actually start to cut, or at least signal it so strongly that by June it's a done deal. So all of this unclenches, but how? Weaker stocks, higher bonds, and that's the big difference maker. Weaker dollar. The big change is we just get back to recession classic. So the bonds bounce. Gold maybe pulls back because term premium unclenches, to Chris's point. But the risk environment doesn't look like it's going to get any better.
What about the whole Sosnofian concept that we're going to 3 months from now? Like, basically, what do you need to see, Ilya? Like, Tesla's expectations were already terrible. To your the point you made, forget the Tesla numbers and they turned out even worse. Actuals. The
Tesla's still at 239, by the way. It's higher.
And they turned out even worse.
Right, and the market's like, Sosnov's point is you're there. Okay, tell me something. The only debate is not is there a slowdown, not like with all the things you can give us to teach a class. This dollar smile, regime change, slowdown, movement of goods and services.
Sure.
Enjoy yourself. Okay? The only debate is how to deal with it from a trading perspective. I mean, there's a whole other thing to talk about from a policy perspective, from an employment perspective, from society, from investment. It's tastylive. You know, this is a trading discussion. It's a trading community. It's what it is.
I think that's the best reason to be a bear. The trend is down. Show me a trend that isn't down.
Because I'm saying Tesla tells you wrong. Tesla says, I can come in at half or a third or a quarter below reduced expectations, and they still will bid my stock.
Because it doesn't matter. And this was
That's my whole point. That's my whole point. That's my point.
Right. It doesn't matter whether they beat or don't beat, because that's not what is animating markets. What is animating markets isn't have we reached all the stock of bad news, or we maybe reached it, or what reaching it means. Nobody is asking that question because everybody has been shown since the beginning of the year that you never run out of bad news.
But the market's there. Volatility is going to come in by half to 2/3. Sosnoff is dead, got him dead to rights. If you don't sell the volatility today, then don't be calling me from this summer when you want to buy a house the size of Chris Vecchio's and you don't have the money anymore because you didn't sell premium.
I think if you want to do that, you sell the vol just in bonds.
You don't get one of those giant Vecchio ape shit long mansions from
I think
November 23. They're renaming it actually. There's the Vecchio. I'm going to try to get
Vecchio. I'm less than half an acre, Kellen.
you put an ape shit across the front. This might be the time to go ape shit short premium. I'm just saying.
I mean, you need the space for the leather works, in fairness.
All right, listen. I'm here being very polite. I've been very polite here all day, letting you two go back and forth. Now I'm catching strays for no reason. Okay.
There's no saddle making without space. It's a labor-intensive, square footage-intensive endeavor.
Look, I think also said the opposite throughout all this. They pointed out, quote, changing political sentiment, unquote, which, quote, could have a meaningful impact on demand for our products in the near term, unquote. Yeah, I'd say so, right? How much of this was already priced in, right? We have cyber that may be coming in 26. I mean, we are $2 higher than where we closed.
And this report is an abomination.
and it was a nuke. So that perhaps is the good news, right? Earnings.
That's what I'm saying.
You're getting.
That's the.
Maybe this is the indication, right? This, Netflix has really good earnings. Their shares the last few days have been doing quite well, right? Netflix here, a modern day consumer staple. You're not going to go out anymore. There's a recession coming. You're still going to stream. You're still going to need your, Netflix and your Philip Morris.
More than ever, you lost your job. All you got left is to watch Netflix.
And smoke and drink your Coca-Cola. And then, because that's all bad for you, you take your Ozempic shot.
Play video games, get some weed.
Right. Yeah. And
no problem.
Well, no, but you see, like
a wheel of cheese.
You see that
the Anthony Bourdain special. Rest in peace.
I think there's a framework here to work with right now. Yeah, man, I could go for an Anthony Bourdain special after
you do a real big cooking. We'll stay home and just watch Anthony eat things and talk to people.
Yeah.
Yeah, and I gotta get a reason. Like, I'll go get some beer after work and a pack of cigarettes, and
get some in out and the rest of it,
and a croissant.
And some cigarettes.
Yeah. Okay. So Tesla here. You have Netflix, which beats and is heavily rewarded by the market, even though obviously the future is uncertain. Tesla is nuked, and the future is uncertain, but it's not going anywhere. I think there are some just sentiment breadcrumbs that, unless we careen further from here, people are clearly looking to try to make this a low in the market right now. I don't know if I would be.
Which is why I find Ilya fascinating, because he's like, take advantage of this and sell and get, even if it's with a directional vertical. I mean, I think there's a lot of, I admire Ilya's confidence, and it might well turn out to be obviously the right decision. But I don't think we're out of the woods yet. I think we could probably see a bounce back here, right? Depending upon what Musk says, if we get a little rally overnight. But the next few weeks, we could stay in this topsy-turvy, both in ES and in Q. Yeah. At least in NQ for the next 2 weeks, for ES, maybe the next 3 or 4. So it's tough to put stock in anything. Like with Besson today, great rumor. You get the details. There's no bargaining going on at all. The negotiating hasn't even started. So more chop, I think, is what the fair play is here, Dylan. I think more chop. If Tom says, this is an environment where, if you look out 3 months from now, you're going to be disappointed. Yeah, my perception is that Ilya's like, no, when you get rally, maybe I'm conflating the two. Maybe they're all one and the same. But I feel like Ilya's saying, no, you should be confident enough when the market gets a little bump like this. You just say, to your point, Ilya, you said, I'm hopeful when liquidity comes back to be a bump. And then if there's a bump, I'm going to use it as a chance to get short, which I think has been working pretty well. It's the thing that works is be on the other side of this thing, because he's always going to say something crazy that's going to make the market. They're always going to do something crazy to make the market go down.
Always,
and then they're always going to double talk their way back. The same as today was it was like a classic Trumpian Trumpistan, And in Trumpistan,
look at what you see here.
We should do a book, Ilya, Trading Trumpistan.
I mean, just the price action. So you get that massive green bar when the reciprocal tariffs get capped for 90 days at 10%. You hit former support at the previous range bottom. You stopped right there. What did we say? We said, what does it mean that you stopped right there? There was no conviction to actually overturn the breakdown. The breakdown was wild. The rebound was wild.
Right, but if you got Vecchio out there on the same day doing math, which is their worst case scenario, with people doing math in public.
Right. And we all sat here and said, wait, did they fix anything? Hold on.
Made it worse. And there's like 1,000 Vecchios doing math in public everywhere.
Since then,
is that how many of
this thing developed
El Salvador,
range, right?
Doing math in public?
That's a bad thing to do, man. You got to be careful. I'll be doing math in public, saying things.
I believe they call it the Singapore special.
Yeah,
but
Ilya, the other side of
what
it
happens
is,
when you chew gum in the street?
Well, how about sell premium and don't worry about direction? If there was ever
in the bonds, I can understand. In the bonds, I can understand. if you're going to be a seller of premium in this environment, the thing that doesn't make sense to me is that there is this ongoing panic in the bonds. I get why the panic is occurring, I think, because if you look at the surge in gold parallel to a dollar sell-off, parallel to a surge in term premium, and not just in absolute terms, but the share of term premium in bond yields, that basically tells you the share of the yield that is compensation for time uncertainty. Like, oh no, over the duration of this, crazy stuff is going to happen. You need to pay me in case. That's the biggest share of the yield since May 2021. That's not accidental. There is a connection there. And so you look at all of that and you say, okay, but the US dollar is still the undisputed global reserve currency, and the US, for all its many, many, many warts here, is still the most eligible borrower because its asset base is still greater than anywhere else, full stop. And so,
and liquidity, and the list goes on and on and on. You know, entertainment,
and there's an
government,
economic
finance,
downturn, and inflation expectations are falling.
AI, you know, blah. Come on, space.
Right?
What do you want?
Why not just
so
buy
the thing here is the bonds bounce. To me, the resolution is the bonds bounce.
Bonds bounce and gold sells off, but
yeah,
Dylan, is the trust is gained in.
I just want to leverage short volatility. I just want a short premium 45 days. I want a short premium 45 days out. I don't want to kick myself. I want to have a good time at the beach.
Then why not just buy out of the money Bitcoin calls? You know, if we're heading into this world that we're all talking about, where there's de-escalation and there's help coming along the way and stimulus or some backing down.
Yeah, just some sort of anything. It's just acceptance. I'm not.
Acceptance, but there's now a permanent discount attached to American leadership, the viability of America.
Volatility still comes in.
No, volatility comes in, but what?
Even if you think you're like, oh, that's a bunch of idiots. You're like, okay, at least we know that's a bunch of idiots. Like, put them in the bucket of idiots.
Well, which volatility comes in is really the question.
Yeah, stock volatility.
Is it economic volatility or U.S.
or
financial architecture volatility?
I don't know.
I think the former, no. The latter, yes.
I don't know. The point I'm trying to get around is that I'm trying to talk myself into looking for some high convexity upside exposure in Bitcoin right now.
You're going back to $1.10 the other way. You're just going to take it hard on a Bitcoin Mad Dogger.
Yeah, and IBIT right now, for people who want to do this via the ETF, it's the high sit around 61. I'm sizing up long the 55, and depending upon your risk tolerance, even long the 60, short the 70. It's a 22% probability of profit, but it's giving you a little bit of that 7-to-1, we'll call it, territory. And over a 59-day window, I feel like gold is going to take a backseat. I don't know why. Just this whole 25% above the 200-day and Bitcoin holding up.
I agree with you.
Like, listen, Bitcoin was up huge yesterday when the world is falling apart. Bond yields up, dollar down, stocks down. Well, dollar's up today, stocks are up, and bond yields are down, and Bitcoin's still up. And that liquidity is coming back in, right? Global money supply is increased.
And there's still a marginal move away from the dollar wherever you can be done, even if it's a social
which
thing.
Will probably continue.
Yeah.
And if Trump is going to flirt with firing Powell, does that mean marginally that you trust the stability of the U.S. dollar, or do you want to have an alternative store of value? If Trump is going to start pinning interest rates lower and we go into an MMT world, does that mean that we're likely to have a yield curve control possible outcome? I would say so. If we have yield curve control, what does that do for an economy where you have stagflation in the backdrop? You probably have capital controls, which makes Bitcoin look a hell of a lot more interesting.
I mean, I can't
theoretical, more of a practical framework.
Can't believe I'm about to say this, but I think the euro is a better store of value.
That is
because they're about to spend all this money. Well, they're about to spend all this money on defense, which has the markets expecting that maybe they'll even hike rates next year, and the euro pays yield. So if you're gonna go to government-backed fiat, which I think is a much safer refuge in this environment than anything that isn't government-backed fiat, because it's backed by governments, and that's very meaningful, actually, because governments have guns. If you have this massive build-out in Europe, and they're spending all this money because suddenly they've gotten religion on mutualized defense and the unreliability of their transatlantic blanket, as it were. If that's what's happening next year, rates in Europe are going to be higher. Meanwhile, the U.S. is going to be cutting. The euro is already surging on this basis, but looks like there's probably more to go. So if I was going to hide out from regime change to a weaker dollar for X number of years, let's call it 3, then I would be looking at the euro, and I'm long. I've been long. When the futures roll over, I'll probably get long again the next contract, depending on where it is. I mean, I'm planning to be a buyer of euros for a while, not in a linear fashion, obviously. When
but would you do a high convexity? Are you suggesting that you'd rather be, like, between now and to Chris's point?
I'd rather own euros than Bitcoin.
As even in the short term, you'd rather be long euro for the next 45 days.
Yes.
Vecchio is silent and with a skeptical facial expression.
We've gone 10%. You think that there's more potential for upside in the euro over the next 30 days than Bitcoin, 90 days than Bitcoin?
No, I'm just saying I would rather own it.
Okay.
Well, what's that based on? Since I think
there is a greater respect. I think there is a greater likelihood that if there is another wave of risk aversion, which to me seems likely, and obviously I'm selling
over
stock.
The next 90 days, we're getting to July 4th here, pal.
Yes.
Maybe July. Maybe.
Obviously, I just sold more. Obviously, I just sold more stock, and so embedded into that idea. And by the way, my duration on this stuff is 60 days, 59 days to be specific. So I gave myself lots of room for tweets and
the 22nd May
take backs and whatever.
You're on the summer solstice. I want another month.
So I've just re-upped there. By the way, if it looks like I'm wrong tomorrow, I'll change my mind because I'm a trader.
We've seen what you do.
Right. So that's what it'll be. So the price action at the end is king. I'm trying to make money, not be right. And I don't care about being right. I care about having positive P&L in my account. So for me, I look at this and go, okay, if I think the trend in stocks is down and the range has broken yesterday and today was a nice backfill of the break that gives you a mulligan to sell it, and I'm short stocks, then I'm betting on risk aversion. If I'm betting on risk aversion, Bitcoin is not going to do well in that risk aversion relative to the euro. The euro is going to be the haven of choice. We've seen it through all of this. As money comes out of U.S. stocks, it also comes out of the dollar and shifts elsewhere. And the elsewhere of choice, liquidity, stability, government backing, prospects for higher yields next year, all of it is euro. So absolutely, if I'm expecting risk aversion, which may or may not come, but if I'm positioning myself for risk aversion, then of course I'd rather own euro than a high sensitivity to risk type of speculative instrument like Bitcoin. Absolutely. That doesn't mean I'm right, obviously. But that's the way I'm trading it right now.
Would you short Tesla volatility?
I
know
don't
you do individual names. I know you. I mean, let's assume you did names. Would you, or a Mag 7 vol number, or a Nasdaq vol?
I don't think that's the place to do it. I think that the place to do it is in the bonds, because the one thing that looks off sides in all of this is the idea that you are going to have Fed rate cuts, that the central bank now has to figure out how it manages to do what it's been wanting to do since last year without now, because of the president's shenanigans, looking like it's kowtowing to the White House. So if anything, the president has made rate cuts more distant, and you can have whatever sort of thought process you can about this is all 4D chess. He knew that that was going to be the thing, and he's doing it on purpose because he wants to actually delay rate cuts. And if they're not delayed, then he can get to say, I'm all powerful. And if they are delayed, then he gets to say, oh, well, look, all of the things that I've been attempting to engineer, the weaker dollar, the reshuffling of paper wealth in the stock market, all of it is still working, and the Fed still has to cut. So eventually I still look like a genius. You can have that conversation. I don't think it's that coordinated or that planned, but I'm not opposed to entertaining that argument. It would be consistent with everything else that's going on. So if you look at it that way, then what you're essentially facing here is a situation where the thing that needs to adjust is the bonds. The thing that's wrong in all of this is the bonds, because the dollar is not going away as the global currency of commerce. The U.S. is still the most eligible borrower, and the thing that resolves the weirdness here is Fed rate cuts and the bonds going higher. And everything else just keeps going. Risk off, weaker dollar, blah, blah, blah. So if you're going to sell vol, and I am, by the way, I'm selling
what
vol.
Do you say, bud?
I'm saying vol. I'm selling vol in TLT.
I still like selling puts and put spreads in bonds in notes. It makes a lot of sense to stay directionally neutral. I still have the short iron condor on in there. So a day like today, that's basically a doji. Is give me a doji every single day for the duration of this trade, and I'll be a happy camper. But we're at the 50% mark here in notes in ZN, which at a 61 IVR, if people are looking for directionally neutral or directional neutral opportunities, this is a place to do it right now. And it's a smaller contract than ZB, so it's a little bit more approachable for retail traders. IVRs are close enough. I think the technical reversals today across the board are noteworthy. I think stocks can probably bounce a little bit. I just think that we've the genie's out of the bottle now. Toothpaste is out of the tube, Dylan. Right? Like, it doesn't matter if Trump comes. I actually don't think it matters if Trump comes out tonight and says, just kidding, everything since April 2nd's been a joke. It was actually one elaborate April Fool's Day joke. Ha 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 ha. Trade relationships aren't going to go back to where they were overnight. And companies that were laid off, that have laid off workers, aren't magically going to reopen their shops, because the contracts that they've had to cancel or pass on aren't just going to materialize out of thin air again. So,
and Europe's not going to go from spending 50 cents on every euro here to 3 cents on every euro here. You know, that's a long-term reallocation of the marginal non-U.S. liquid asset away from the U.S.
And there's been no rhyme or reason through all this. It's just been on the arbitrary and capricious whims of one person in the White House. And you've noticed a lot recently, the stream of commentary from Hassett, Lutnick, Bessent, Navarro, Musk, it's all quieted down. You're not hearing it multiple times a day from multiple different advisors, because they were all effectively neutered. They would say something and Trump would almost be watching them and go, okay, time for me to pull the rug on their credibility, and then say something diametrically opposed to it. So everything is in Trump's hands right now. We are waiting. We are watching. And we'll do this all again tonight, because overtime is out of time for this Tuesday, April 22nd. We'll be back tomorrow, same time, same place, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, Dylan Radigan in Milan, I've been Chris Vecchio in New York. We'll see everyone in a little bit. Quick break. Tasty at Night coming at you, starting with Ilya Spivak and Macro Money.
See you there, everybody. The US dollar manages to find a little bit of support as stocks unclench and the bond market again finds a familiar bottom. Are we perhaps starting to flirt with the possibility that the worst is over after a rough start to this week? Or is this the temporary bit? Is this the reprieve? And are we going into something more scary and uncomfortable as the week progresses? That's what we are going to unpack here as we break down these markets on Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live, and today we are going to put a lens on this conversation that is going to approach what's happening from the perspective of the US dollar and sort of the window that it offers on what the situation is, how it is developing, and what is likely to come from here. Because, of course, there is a diversity of markets here showing various things, but what we certainly find here is that there is a situation where the most liquid of all markets and the sort of cash of choice for global investors is shaping up, if only as an indicator, to be one of the more glaring sort of signals suggesting that what we might have been used to before is not what these markets are currently showing us, and that whatever may be a near-term resolution or a near-term recovery might not be appropriately treated were we to wear the same hat that we might have worn as investors over the past 40, 50 years. That in fact, what we are entering is a period that is fundamentally different from not necessarily all history, of course. Economic history is tremendously varied and diverse, but a period different from the post-war normal that has persisted basically since the untethering of the US dollar from the gold standard in the early 1970s by the Nixon administration. So let's take a look here and unpack what currency markets seem to be saying here and how that might then extrapolate elsewhere. So first things first, this is the dollar index, and what this is albeit an imperfect, but the standard basket measuring the dollar's performance against its major counterparts. I say imperfect because this basket was created before there was a euro. And so this was a diversified basket at one point because it included currencies like the Swiss franc in addition to a French franc. It included a German Deutschmark, an Italian lira. And obviously, while the Swiss franc is still its own currency, its significance has diminished in global trade by leaps and bounds, and many of the others have fused together into the euro. And so the basket is a bit skewed to an older reality than what persists now, Tellingly, this basket doesn't include, for example, the Australian dollar, which is now the fourth most traded global currency because of its reflection of the rise of China, and China's own currency being something that's tied up onshore with various capital controls and competing exchange rates and what have you. So it's not a great basket, but it does tell a story. And the story here clearly is one of dramatic US dollar weakness since the beginning of the year. Now, it's important to put this dollar weakness in context because it is happening under very unusual circumstances for what the financial architecture might have been expected to produce. So here's the beginning of the year. We can see the dollar is selling off. Now, this is happening at the same time that stock markets are selling off. Here is the decline, obviously, in the S&P 500 as a kind of benchmark for what's going on. That starts to be something that is activated, let's call it early to mid-February or so. That's where we sort of establish the beginning of the move, but you'll notice the highs actually are set all the way back in early December as we start to get ready for the transition into the into the calendar turn, and of course the administration in Washington D.C. Turn from 2024 into 2025, and we set the high in December. We ultimately never set another one, but the sell-off starts a little bit later. We likewise, this is sort of something that's been occurring more recently, going to the beginning of April, are seeing a sharp decline in the bond market. Now, we can see that since the beginning of the year, this part of the equation was actually moving in the other direction and working as you might expect. So we start with there is a growth scare because economic data that starts coming out in late February begins to show that business and consumer confidence has been severely hampered by uncertainty around the rollout of the Trump administration's new fiscal policy. That's at least what consumers and businesses are telling in these surveys. And what you then see is they're holding back on economic activity as a consequence of that uncertainty. And because they're holding back on it, economic activity significantly slows. And so the markets say, oh, well, okay, so this means earnings down, right? Stocks begin to decline. And the Fed is probably going to have to cut rates to combat whatever economic malaise is coming. So bonds up. We, of course, know bonds move inversely, bond prices, that is, move inversely with bond yields. So you get bonds higher as you see expectations for stimulus build. And indeed, if we take a look at what is being priced into Fed funds futures, we can see that indeed, since the point where stocks begin to sell off, you get a more dovish shift in Fed policy expectations, both for this year and next year, but most importantly, for this year. You go from a cumulative of about 50 basis points in cuts over this year and next being priced in around the start of February, and the outlook for this year being a single rate cut of about 25 basis points being baked in. You've now gone to closer to 90 basis points. And so, of course, you see the response in bond markets as you might expect to see it. So far, so good. Everything here seems to follow familiar norms. But then the bond market marks a strange turn. At the beginning of April, there is this violent sell-off where bonds crash, yields surge. And against that backdrop, stocks keep selling off. Here's April, and that push through support at just above 5,500 on the S&P that follows with that bond sell-off. And again, most interestingly, the dollar sells off also at the same time. So whereas this, you might surmise, makes perfect sense because, okay, stocks are selling off, the Fed is going to cut rates, weaker growth, lower yields. So the yield-based support for the dollar is eroding because if the Fed is going to cut aggressively, that'll undermine the dollar's yield advantage against other currencies. Very, very classic. Dollar sells off. Here, this looks a bit odd. Not only in its violence, but also in its direction. Because this is happening as yields rise and stocks sell off. Now, we've talked about this extensively before, and we'll come back to it here because it is a useful view on what we are seeing here. This is the dollar smile model developed by economists Stephen Jen. And what we see here is the relationship of the dollar to global growth dynamics that really reflects how the dollar has worked since untethering from the gold standard occurs in the early 1970s, and really describes what the financial architecture, what the monetary architecture of the current financial system has been over that time. So we're looking at about 5 decades here. And so what we see on the bottom here is the relative outperformance or underperformance of the U.S. economy. So here's 0, where the U.S. economy is growing at about the same rate as its G7 major counterparts, so other big developed economies. In this direction, the U.S. is underperforming. In this direction, it is outperforming. So here the U.S. is growing faster, here the U.S. is growing slower. And we relate this to the value of the dollar. We can see here that the dollar is relatively stronger, that is up relative to here, up relative to here, 0, when the U.S. is either doing much better or when the U.S. is doing much worse than its global economic peers, such as they are. Now, why is this? This is obviously special. This is obviously different from other major currencies. This is because the dollar is the quintessential unit of global commerce. We're going to get an updated set of these statistics from the Bank of International Settlements this year. They publish them every 3 years, and 2025 is one of those years where they're going to update it. But most recently, we see 88% of global monetary transactions are settled in the US dollar. And that is because of its unrivaled liquidity. So when the US is outperforming, it's the usual story. Oh, well, US is growing faster, so the Fed is hiking rates more, so the dollar's yield advantage builds, dollar goes up. This is how all currencies work for the most part. If the economy is strong, inflation expectations go up, central bank raises rates, yields on the currency become more appealing, and people buy it. It goes up. That's textbook. What's exceptional about the dollar here is its unrivaled liquidity means that when there is some sort of turmoil, such as when the world's largest economy is going into a crisis or a recession, like this, where the US is underperforming and dragging down everyone along because it is the world's largest economy and the deepest consumer market, capital flees to safety. People cash out of riskier assets, but what is their cash of choice? It is the dollar, or has been. And the reason it has been is because of this unrivaled liquidity. It's easy to come in and out. It's not something that's going to move a lot with huge capital inflows and outflows relative to other currencies. And of course, because of its built-in underpinnings as the indispensable unit of commercial exchange, there is the very strong basis of mutualized necessity. Global commerce needs a vehicle. Secondly, because it is underpinned by the faith and credit of the US government, which is, for all its warts, the world's most eligible borrower because it is sitting on the absolutely biggest asset base in the known universe. It's got a lot of collateral to put up, and more collateral than pretty much any other borrower that we know of. So, not surprisingly, the dollar becomes the cash of choice in anti-risk or risk aversion times. If this was the regime before April of this year, it is obviously not the regime now, because neither higher yields, that is lower bonds, or risk aversion are doing anything to help the dollar here. It is unable to take heart from any of the traditional vectors of support. It is in fact going the other way. And the explanation seems to be a breakdown in the architecture itself, where what you see around fiscal policy uncertainty most critically is first, and perhaps foremost, a jump in term premium baked within U.S. Treasury yields. That is to say, the cost of compensating for duration risk, the cost of paying for U.S. fiscal uncertainty, has jumped to the highest since May of 2021, on the eve of the Fed's rate hike cycle, on the eve of the Fed admitting that it needs that rate hike cycle in the middle of 2021, which is a huge inflection point post-COVID for global markets. And so what you then find is that this growing risk is driving capital out of US dollar-denominated assets writ large, be they the dollar or US stocks or US bonds. Everything is falling in tandem. Moreover, this uncertainty is translating into expectations of a steep recession that then brings inflation net down, despite the fact that ostensibly the catalyst for all of this is the increase in tariffs that the new Trump administration has announced that will lift prices on virtually everything, because it increases the prices of inputs as well as of imported finished goods, and thereby lifts overall price levels. That this is being reflected as falling inflation expectations, so-called break-even rates, baked into bonds, suggests that the markets are already seeing through the rise in costs and to the economic damage that it will cause, and the recession that will follow, and the loss of demand that will follow. And that what this will do is actually end up with net lower inflation, not higher, because of the economic damage. We can see that show up, of course, in the flow of economic data. We've used this Atlanta Fed GDP Now model as a kind of barometer for the direction of economic data, and we can see that the inputs into this model, which is updated anytime that a big piece of economic data comes out, hence the nowcast sort of nature of this, we can see the tone of the data has clearly been negative, because what it's done since February is push the model lower and lower and lower. Never mind whether we actually get a growth rate of between 2 and 3% on the downside when Q1 GDP numbers actually come out. That may or may not occur, and ultimately isn't what's important here. What's important is that the model is sloped the way it is, suggests the inputs that have been going into it have looked abysmal. And so, needless to say, of course, as we just saw, this has translated into the idea that the Fed is going to have to cut rates to battle an economic downturn, which of course is already in the markets to some extent. We can see this adjustment. perhaps as more economic data comes in, more of an adjustment might be necessary. As it stands, the first rate cut seems to be on the menu for July, after which we start to see a more accelerated pace lower. And looking at the numbers we've started to see on what the economic growth picture around the world is looking like, maybe there's a reason to see this move into a still more dovish sort of setting. We just got numbers today from the IMF. They updated their world economic outlook, and we can see that, not surprisingly, the direction of travel is overwhelmingly lower. So for world GDP expectations for 2025 marked down versus the outlook in January, which was itself a markdown from the outlook in 2024's last update in October. So clearly, this is looking meaningfully weaker than sort of the recent expectations. That extends to the advanced economies, of course, to the United States, which actually sees the biggest downward revision in expectations for 2025, sort of amongst the majors, and also the biggest, or one of the biggest ones, the only bigger one it seems like is China for 2026. And we can just see the negative numbers here pretty much across the board for everyone except Spain, of all things. But Spain is not a big enough economy to right the ship if the US and China and the euro area more broadly is looking weaker. We are going to now get a set of PMI data over the next 24 hours that may well speak further in this direction. The expectation is weakening Australia, back to contraction territory here, weakening in the Eurozone, a softer flavor of standstill there, weakening in the UK, a return toward standstill there, and for the US, significantly weaker service sector performance and a return to contraction in manufacturing that almost certainly brings us closer to standstill on the composite after a bounce in the previous month's numbers. So all in, this seems to translate to still lower interest rates and still more of a pressure for more easing from the Fed to combat whatever economic downturn is being flagged right here, which of course, again, is bad news for the US dollar. So in that the dollar is unable to find its familiar support, and in the longer term conclusion that probably all of this resolves as the markets anticipate in a Fed that's more dovish, lower interest rates, and eventual rate cuts of size, probably means that this move here is perhaps far from over, and that we're looking at structural regime change. And if that's the case in currency markets, it may well be the case more broadly. Because if we are going into some sort of whole new architecture on the price of cash, the cash that powers the global system and almost certainly will continue to power it, well, then the reaction function elsewhere, almost by default, might be considered different, and the environment as a whole might start behaving in ways that we're not used to in recent decades for a much longer period of time. And of course, for traders, the upshot here is any pull-up in the US dollar near term, because of course markets don't move in straight lines, probably looks more like a sell than anything resembling a trend change. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. In 30 minutes' time, I'll be on with Victor Jones for The Price of Truth, as I am every Tuesday. Back with Chris for First Call on or for Futures Power Hour, rather, on Friday. Back with Victor for First Call and with Tom on Sundays. Writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Good.
What is going on, everybody, and welcome back to Risk and Reward with Gus and E. Gus, been really volatile over the last couple of days, first couple of days getting into the week, but I know we got a new Risk of the Week to put on, so we'll catch up to all of that before we do what's going on, what's new. How we doing? Blank white shirt today. I don't know what that means. I don't know what you're indicating from that, but good to see you, bro.
The fun shirts are just for Thursdays. That's the last stream of the week. We got to roll out. I actually just did my tally this morning as I was getting dressed, and I have, I think, 2 fun shirts left that have not been debuted yet, and then I will have to go shopping if this is going to be my thing now. But no, feeling good. Yeah. Portfolio, as I've mentioned a lot, is mostly shares right now, which means that on any green day, I look like the greatest trader in the history of the world. I have 17 positions. Right. Every single one of them closed the day green, so it's hard to complain when you're in that position. So yeah. Feeling good. Nice. And yeah, this plain white shirt, it has me thinking about my school uniform when I was a kid. Mom, if you're watching, you're probably laughing at that one. But yeah, it's it makes me think of when I was a kid, we always just had the stock white shirt. I actually caught myself in the mirror today, and I was like, man, I swore I would never dress like this again.
Reminiscent. Yeah. Here we are. Full circle moment. But no, an extreme reversal in the market today. I know it played out with the positions like you kind of just mentioned there. Kind of same thing on this end over here. I know some of the more neutral positions didn't reap as much of the reward, but a lot of those directional positions definitely. I mean, what a reversal from yesterday just to today. So I know some of the risks that we put on yesterday, I think we both put on long delta, but both of those should be looking pretty good at about this time right now. I know we'll talk a little bit more about that and get another risk of the week on today, but no, it's been volatile. I know we had an extreme sell-off yesterday out of the gate, and then we gave everything back today and some. So we'll get into this risk of the week, putting on real risk behind one stock that we believe has edge. Was it a difficult decision for today, Gus, as we get into our first one for the week?
Yeah. I mean, it was, there was lots that I tossed around. I ultimately kind of have decided to go with a content stock, but we'll get to that in a minute.
A content stock. Okay.
Yeah. But it was a tough choice. A lot of attractive options, directionality really hard to determine. So we'll get into it, but I'll let you go first.
I feel like right now there's a lot of underlyings that we could choose for some volatility, but I thought it was only right to bring up gold. Gold has been going on a 97, 99 Bulls Michael Jordan run. I don't think we've seen anything since. So I'm looking at gold here. I know gold had another leg up after that insane rally that we saw last week. And at these levels, it's starting to look a little bit more